Well, hello out there, people of the world. How are you today? I'm glad you guys have chosen to come out on a Saturday to What Went Wrong. We're going to talk about some losing trades. All right, so I see some people are coming in. I see some comments. You can see. Can you guys also hear? Can you hear me? Let me know if you can hear, and we will get on the road. All right, so we got loud and clear. Several people are saying they can definitely hear. One person says can see no sound. I would say that might be a local issue in your end because definitely several people are saying they can see. All right, so we got Mike here. How are you, Mike?
I'm alive and well. I was hanging out on the beach earlier. It's a beautiful day in SoCal. Now I'm indoors on a webinar, wondering what could possibly be going on at the beach that I might be missing out on. And folks, that is called FOMO, fear of missing out.
Boo, boo, boo. What a transition. You know, this is a professional show, isn't it? This is amazing. Now, don't have FOMO about the beach. Now, which San Diego beach are you closest to?
I am in Southern California. I'm by Mission Beach, which is like the
Oh,
second lowest. The next one down would be Imperial Beach, and then it's Mexico.
Imperial Beach, yes. So you're in Mission Beach. Okay, I'm sorry. I thought you were in Ocean. Okay. Man, that's a nice place. Now, everyone is here. I'm getting others. Okay, good. You guys can hear. I'm glad you guys came out. We have a very special guest with us today. Now, you know her and you love her, and she's here today with us. La Lovely Trade, how are you today?
I'm doing great. I'm happy to be here. I'm in Daytona Beach, Florida, so also near the beach. And I'm just excited to be here with you guys. Thanks for having me.
So we've got two beach bums with us. Okay, so let's see. Let's just double check some things here. All right. Again, so there are some people who are saying they see the screen, but there's no voice. Definitely, other people are saying there is sound. So this, what do you think, Mike? I think it's good. I mean, most people are saying they can see. You guys also let us know. Give us more of these vocal checks. We're just going to roll with it. It looks like it's good. If you have no voice, you can't hear me, so I guess it doesn't matter. So we got two beach bumps here. Also, let me know where you guys are out there. Where are you in the world? Are you in the United States? Are you at a beach? Are you like me in the mountains? Are you not in the United States? So let's get some of that up here, and we're going to get going with it. We've got Louisiana, New York, Chicago. Mike, would you ever live in the Northeast?
I was born and raised in New York for 26
Right.
years.
That's right. Would you ever go back?
Hell no.
New Zealand is in the house. Yes, a beautiful, beautiful country, beautiful people. All right, so here we go. Here is our contact info. I would like to just take a minute and if you guys don't mind kind of introduce, because there may be people here who are not part of the Black Box Stocks community. It's definitely open to the public. So just so you kind of know the host here, again, this is a weekly seminar that we're doing called What Went Wrong, which is a losing trade discussion. A lot of people talk about gains all the time. You see a lot on the internet. You hear a lot of people posting confirms of gains, and everybody takes losses, and it is where you learn, in my opinion. So this is a seminar where we just talk about some trades that didn't work out, or we talk about some general subjects that have to do with losing. And just so you guys know, if you're not in the Black Box Stocks community, my name is River. I'm at the top of this screen. This is my contact info. I teach Intro to the Market at Black Box Stocks in our education program. I also co-host this event, and I also do the Riverside Chats podcast, where I go and have very long, extended, casual conversations with the moderators here at Black Box Stocks. And I hope you guys check it out. So my name is River. So tell us what you do in our community, Mike. Tell us about 7 Star Mike real quick.
I have two main trading styles. One is technical analysis and one is options flow. So I teach the understanding options flow class for the Black Box team. I am a moderator for their chat room where I'm answering questions throughout the day, whether it's flow, whether it's a trade someone's in, whether it's a setup they're looking at. I am there from bell to bell every day. I am a full-time trader, so it allows me to be in the chat room talking to people, walking them through trades or giving. I can't really tell people how to trade because we all have different trade styles, but what I can do is give them my opinions if they say, hey, what do you see on this chart? And I hang out here with you on Saturdays talking about things that can go wrong in trading, because as a moderator, that's a lot of what my job is. People are coming to me asking questions on, I'm looking at this setup, what do you see? I took a trade, it didn't work out well, what could I have done differently? So as a moderator, I'm one of the people that our members come to and look for help or guidance, or am I seeing something correctly? Or what's your opinion on this or that? So I get to talk to a lot of traders about things that are going wrong or things that they're looking at before they can go wrong. So that kind of leads into this Saturday hangout where I just have a bunch of people that I'm in contact with asking these things all day long during the live markets, and we get to hang out and review them on the weekends.
Yeah, nice. And that, this is it's a hangout. This is just a laid back conversation where we go over these things. So you guys, if you have questions throughout this at all, you want to ask questions, anything about trades we're talking about or this issue of the day, it is FOMO, but we'll be talking about other issues, of course. But just keep that in mind too. Hopefully you guys will be a big part of this, and this will be an interactive experience. And if you have questions, just type them up there or comments, and I will get to them. And we will definitely bring you guys into the situation. Now, we got one more person. Tell us about yourself for someone who's not in Black Box. They don't know who this Lala Lovely is. They don't know the deal behind the name. They don't know what you do. Introduce yourself. We need to know.
Okay, I am a Black Box moderator. I'm the newest one on the team. I just started in November. My main moderation is going to be nights and weekends. That's when I'm on the most. I do try to get on there during the day, but being a new moderator, I still am struggling with balancing trading and moderating at the same time. It's a little difficult when you're staring at the charts to also talk to people. So that's my goal I'm working on right now. But you can always find me there nights and weekends. I am a full-time options day trader, and I love momentum plays. Let's see, and that's about it.
Yeah, and so we've got a wide range of stuff here, and these guys with me today are both full-time traders, and Mike has been an integral part of the Black Box Stocks community for years. And like Lala said, she's been trading for a long time, but she's this newest moderator. I am a part-time trader, so we have a lot of interesting, I think, takes on things because I have a full-time job that I really love, and I work at Black Box Stocks, and I also just trade part-time. So we have we have a big range of experience here. So definitely, I say let's just get into it. And I'll just tell you real quick, the idea about this show came from, I write a column for Trade Talk Media, which is Mike's website, which is an amazing resource devoted to making trading simpler. And I just came across it a while back because that's what I needed because I was making it way too complicated. Anyway, I eventually got the great honor to contribute a column to it. And basically, I had a few volumes. Yes, thank you very much. I'm glad. I appreciate that. I had a few volumes where I talked about learning from mistakes, where I went through some losing trades that I had made. And I got a lot of response from people who said, that's great to hear people talk about losing trades. Sometimes people feel like they're the only ones who are losing. So you guys know that if you're the only ones that didn't, you're not the only one who lost money this week. So nonetheless, here we go. I am a professor. I deal with human learning theory. Don't worry, I'm not going to bore you with a bunch of fancy stuff. You don't have to take notes, but I approach learning as iterative learning real quick. That idea is this: you take an action, you fail at it, you reflect upon that failure, you refine, and then you redeploy. That's one iteration, and then you repeat. So if you think about that with your trading experience, that's a powerful way. I've been applying human learning theory to my trading journey, and it's been fairly successful. So the idea is this iterative learning paradigm that is extremely powerful. Failure, you'll notice, is this huge part of it. So you can't ignore the fact that you fell, and you need to, every trader, in my opinion, needs to take the time to reflect upon why you failed, what were the mistakes, and how can you move forward. So the general theme is just open and honest discussion about learning from losing trades. So we're going to explore from losses. We're going to get into it. And last thing, there's a handout if you want to submit some losing trades for next week's seminar. I hope you will. You can see that handout. My contact info is there. Hit me up. Let me know if you'd like us to go over one of your specific trades. So we're not going to run from failure. We're not going to act like we don't fail. We're going to talk about why we do and what we can learn from it. We'll talk about FOMO. We'll talk about averaging down. And then we'll talk a little bit about what I call the devil inside when we get to it. So any of you guys, what do you guys think? FOMO. How would you describe FOMO to a new trader, Angie? How would Lala describe that? Let's talk about FOMO.
When you see a ticker that is starting to increase in price very quickly, and you feel like you should jump in because it's going to continue to go. So of course you have that fear that you're going to miss out on the play, when in reality you probably already have.
Mike, you've been trading a long time, and tell us your take on FOMO. I like to start there because I think I like to hear what Mike has to say about FOMO.
My take on FOMO is that it's a psychological disorder and it's dumb. And I'll tell you exactly why I think that. Now, here's the thing. Almost every new trader you talk to is going to experience this. So when you step back from the big picture, if you guys take a lot of the chats and seminars I do, I say that a lot. Step back from the big picture. So it's one of those things where, let me ask you a question here. Whether you took a trade on Friday or not, did you see any setups that you could have taken?
Oh, yes.
Okay, so let me ask you another question. Thursday, whether you took the actual trade or not Thursday, did you find any setups that you could have taken?
Yeah, sure.
Okay, let me ask you another question. Wednesday, whether you took them or not, was there any trade setups that you could have taken?
Good ones or just setups?
Just trade setups that you could have taken.
Every
And
day.
here's my point in asking this on every single day. Yes. FOMO is basically, it's the fear of missing out. So what people are doing are jumping into trades that they've already run, they've already made their move, but they don't realize that because they're like, oh my God, this thing's running, I got to get into it. So here's my point in asking you those questions day by day. There's always a trade setup out there. Now, it doesn't mean we're going to find them, and it doesn't mean we're going to take them all, but there is always a trade setup out there. There's never really been a day, and there are, throughout the year, there's probably, every year, I'd say there's maybe 3 to 5 days where I don't place a trade the entire day. 3 to 5 days out of the entire year. So it's pretty much a situation where there is always another trade out there. So if you see something running and running and running and you're not in it, and then finally you go, oh my God, I got to get in this now, it's just not stopping, you've already missed most likely the move. And you've got to keep in mind, there will always be another trade to take. So FOMO is dumb because you're not missing out on anything. You might have missed a specific entry, but there's always going to be another one. So by jumping into a trade that's already made a big move because you're scared you're going to miss a bigger move, you're increasing your risk for that trade, and you're kind of blindsided to the fact that if you don't take this trade, there will be another setup. Now, of course, if you trade Netflix, Amazon, Tesla, Roku, and you see one of these tickers go up $8 and you're like, oh my God, I knew I should have been in earlier. and then it's up
Yeah.
$10 and you're like, oh, it's still going. And then it's up $14 and you're like, oh, I got to get in this. It's just not stopping.
I'll keep going. Yeah.
Again, you got to keep in mind, it's already made a big move.
Yeah.
Now, Amazon and Tesla, if they move $15, they can move another $15 easily, but you've got to look at risk reward. So the risk associated with jumping in something late, just because you think it's going to keep going and it's already made an $8 move, I'm not going to miss the next $8 move, so I've got to get in. There's always another trade setup. So you're not missing anything. You might have missed that specific move, but if you miss that specific move, there's another one at some point coming up.
I mean, I understand that 100%, and I still sometimes feel that tug. I still I totally understand what you're saying, and I fully
So
agree.
let me ask you another question, and this, again, stepping back, this will make perfect sense with such a stupid analysis. When you were a kid, did you ever touch a hot stove?
I don't think about my childhood, but yes, I did
I think
actually.
we've all done that once, right? Let me ask you this, whoever's listening, have you ever touched a hot stove a second time? What about a third time? At some point when you keep doing this, you realize when that stove is red or orange and you touch it, it's going to hurt. So you stop doing it. So
Yeah.
if
Does
you
it
have
have
the
to hurt?
itch to get into these trades and you're like, oh my God, it's running. I want to get in. I want to get in. Just remember, at some point, you're going to do that, continuously lose money. And at some point, you're going to say, you know what? Every time I do that, it hurts. So you're going to get to the point where you just stop doing it. So for me, like I said, we were talking earlier, I've got my issues with trading. I'm not a perfect, flawless trader. FOMO just isn't one of them. It's not like I just don't have FOMO. If I look at a chart and say, oh man, that was a good entry, I missed it, I just have zero, concerns about trying to get into the trade. So it's just not something I do. And the reason is, and again, I'm not trying to say I'm a flawless trader, I just don't have the issue of FOMO. And the reason for that is because I used to, and every time I would do it, I would chase these entries because I'm like, oh, I knew that was a good entry. And even though it's run, I'm still going to get in because I was right. That was a good entry. But that good entry was, $4, $5, $6 lower. But because I looked at the chart right and said that was a good entry, I'm still going to get in the trade, even though at that point I shouldn't. Every time I've done that, I lost money. And it hurts to lose money, right? So I do it again, lost money. Oh, that doesn't feel good. Do it again, lost money. It doesn't feel good. At some point, you're going to say, I should just stop touching the stove.
Right. But you touched that stove several times. Is it safe to say, in your opinion, and you too, Lala, is it safe to say you think nobody is naturally good at resisting FOMO? Do we have to touch the stove?
That's a good question because I just know personality. So this is a big thing about trading, and we've spoken about this in many different formats and seminars and just posts on Twitter, etc. You've got to know the type of personality that you have. Yes. Okay, so as a trader, you've got to know your trade style, your trade personality. You've got to know who you are as a person. For me personally, I know when it comes to learning something new, I am a stubborn person. So I'm going to touch the stove 15 times before I realize, hey, you know what? 15 out of 15 times that hurts. I should probably stop touching the stove. So I know myself as a person is just, I'm going to do something a few times wrong before I really sinks in that says, hey, you know what? You really should stop doing that. Statistically, every time you do that, or a great percentage of the time you do that, it hurts. So stop doing it. I'm sure there's people out there that can look at something in theory and say, you know what, yeah, that makes perfect sense. I'm just not going to do it. And they're so robotic that they just don't. I would say in trading, we trade based on emotion, right? We want a lot of money, or we want to get away from our job that we hate, or whatever the case is, right? So we're so caught up in emotions. I think most people are going to succumb to, whether it's FOMO or oversizing or whatever the issues are. Like I said, I don't have problems with FOMO, but I've got problems in other areas of trading. So we all have these things that, as a person, something's going to dictate my personality. That's going to carry over into trading. So there's probably someone out there that just, they're not predisposed to doing these things, or they read about them in theory and then just don't do them when they're actually trading. I'd say realistically, that's probably 1 out of every 1,000 or 10,000 or million people. We're all going to succumb to these issues in trading, whether it's FOMO or something else. I don't think we're naturally. I don't know. There could be people out there. I think we're all going to have these issues that we just have to work through. Whatever the issue is, there's something about our personality that leads us into doing that. I don't think there's really a lot of people out there that just don't do these things. Like after a while, I've never had FOMO, but it's because I did it for a while and it hurt.
Yeah, and you guys are both full time, like, and I'm curious too, your take on like how you personally deal with FOMO and if that's still a thing. But I'll say, Mike, my wife is a mathematician and she's extremely, she's a rationalist to the max. So she doesn't trade. She doesn't have an interest in trading, which I find to be unfortunate because, she's a mathematician. I think she would be great at it, but she just has no interest.
Yeah, that logic mindset would be perfect. And that's what trading is, right? When the chart does this, you do that. So if she is so mathematically inclined to the numbers either work or they don't, in that mindset of these conditions exist to get this result, I mean, that's what you want as a trader. But if you don't have the passion to do it, it's not going to work out anyway, just because your personality says you might be good at it.
That's right. She would be so good at it because she just would be. Like I'm the guy who rides sport bikes because I'm just a speed junkie. You know what I mean? And like she's the one who's the mathematician. And like I'd kind of wish, she would get into it. But it is what it is, and Mrs. River does what Mrs. River wants. That's the deal. And that's totally fine. Lala, tell it, what's your deal with, have you burned FOMO out of your trading practice also or not? What's your take on it?
Yes, I have burned it out, but I also went through it a lot at the beginning. I had a lot of FOMO especially the first few months of my trading. And same thing, once I would lose so much money, I would beat myself up over it. And then I went kind of to the opposite side of FOMO, where I would look at my trades after I was out of them, and I would see how much money I left on the table. And then I would have FOMO after the trade was over, and I would beat myself up over that. So now I'm finally at a point to where I'm just at peace with getting a piece of the pie. And I'm also a lot more robotic about where I get into my entries. So I have a certain levels where I will get in, and if it's already past that, I just won't get into the trade. If it comes back and retests and it hits my rules again, then I will possibly get into the trade, but it has to hit every single one of my rules, or I'm just looking for another ticker. Because like Mike said, there's, so many trades that will work out every single day. Every single day we are all missing tons and tons of trades that would have paid very well. We just don't see them. So if the one you're looking at has already run up too much, just find another one.
How long did it take you to have that discipline?
I'm a fairly new trader. Let's see, I joined Black Box January 24th of 2021, so just over a year, and I didn't know anything about options when I joined.
But you didn't trade, okay, so you didn't trade options before you joined?
Nope. Okay. I've been trading options for just over a year, and I wasn't even in the stock market. I owned a few shares of Carnival Cruise Line that I bought at their highest price. Makes just sense. Because I went on a few cruises.
That makes sense. Buy the top. You like the cruises.
Yeah. And once I found Black Box, I was like, this is what I want to do for the rest of my life. I don't want to do anything else. Like, I was addicted. I loved it. I just studied after work when the kids were in bed. I would put 40, 50 hours a week into studying and just really put everything I had into it. And it's funny because my kids, they're teenagers now, and one of them just said to me a few weeks ago, Mom, now I realize why you put yourself through so much this past year. He's like, it's finally starting to pay off. And that just really made me realize that, it's teaching them more lessons than just the stock market, them seeing me work so hard for something that I really love, showing that it is possible to do this in a shorter time frame. But you do have to be really, really strict with yourself. And now that I've found my like not really winning combination, but the strategy that works for me a lot more than it doesn't work for me, I stick to that strategy. That's what I use. I'm not going to change it. Like, why fix what's broken? And yeah,
So
I think I answered the question.
Yeah, no, that's great. That's two very interesting things. So FOMO is just not a thing you deal with anymore. And that's phenomenal progression. So you started trading in January of 21 and you're already full time. Like that's amazing. And that's great. Now, FOMO, that's awesome to hear. And we're getting comments that people are having, they understand the FOMO, they're having these things. And I definitely thought that FOMO is very relevant with this past trading session with Friday. So, and someone did ask, Lala, do you only trade options with your strategy? So that is correct, right? You're just options. Is that correct?
Yes, just options. And I'm only a day trader. Back when the market wasn't crazy like it is now, I would also swing trade our flow plays. But now lately I am strictly day trading. I go 100% cash every day.
Yeah, I've been doing that too for a minute now. And I mean, I know like back in the room, Mike, I mean, in late summer, remember those great days, this fall, like flow trading, swing trading flows was very common. And it's just, things happened and the big money sidelined their money for a minute. But is it safe to say, Mike, that the flow is coming back? Because it looks like it kind of is.
Slowly, but not the way we want it yet.
Yeah, that's right.
So we saw Visa come in the other day. That was really good looking flow that we haven't seen in a while. We saw, I think it was Spot, and then there was another one. So we're getting little hints of it. It's not nearly the way it was, but little hints is better than nothing at all. So we're creeping in that right direction. But then we had the rate hike speak that basically spooked the market again. So as far as that longer term swing stuff, we're just in a holding pattern right now. It makes sense because if you look at these market conditions we're in, the big money isn't going to open a $6 million options position where it's just going to get chopped up with theta, right? So they don't want to be in these positions with this huge size when all it's going to do is decay away for their, 2 weeks, 6 weeks, 8 weeks. We don't know how long this is going to last, but it makes sense that they wouldn't do these longer term swings when the market isn't in a directional, kind of a pattern.
Yeah, no doubt. And I mean, I know you don't have a crystal ball. I know no one knows. You're one of the biggest proponents of just showing up and observing what the market gives you. But there's a lot of speculation about Monday. And I like this topic today of FOMO because when that drop happened, after that tweet started circulating yesterday about possible imminent invasion of Ukraine, and we saw that intense sell-off right there, I definitely feel like that's one of those positions. Like, do you think some people were overtaken by FOMO when it comes to entering a big put play based on that news? Or what do you guys think about that? Can you imagine that being an issue yesterday for some people?
For sure. I mean, when you see something all of a sudden reverse and just has massive volume come in, if you're not in puts right away, so a lot of us that are quick on the scalps, the second we see something like that, I'm not personally looking at headlines and news, but I know something happened to spook the market. So I'm immediately going to jump into puts if it has the look and feel of that. And then I might go back and try and figure out or listen to what people are saying about why to see whether or not it's going to sustain or not. But if you didn't get in right away and you just see it drop, and you're going, well, at some point it's going to pull back, and it just drops. A lot of people are going to say, well, I guess it's not pulling back. I'll just get in here. And usually at that point, that's where it will pull back because you've waited for so long to get in that at some point, yes, there will be a pullback, but it might be a very small pullback and then continue in the downward direction. So it's not always a disaster. But when you see something just, we're kind of either level or trending up a little bit and then it just tanks, there's always going to be people that are like, oh my God, it's not stopping. I'm going to have to get in puts. And at that point, like I said, it doesn't mean the trade is over, but if you're watching something drop, and then going, well, I guess it's not going to stop, I should enter puts, At some point, you've got to wait for some kind of a retrace or a bounce, or again, understand the risk that you're taking is increased. So it's not necessarily a bad thing if you understand that the risk is exponentially greater. So in other words, if a stock is dropping, and you're looking at it going, oh man, I should be in it, and then maybe there's a small retrace or something like that, and then it starts dropping again, you might want to lower your position size, or just understand that it already made a $6 move in the downward direction, and then it retraced maybe 40 cents and then started going down again. There might be greater risk. So again, it's hard to say just in general terms. You got to look at the market and what's causing it to drop in the charts, etc. But you might want to size down, or just understand that you're taking on extra risk when you do that. And that's what FOMO is, right? You're watching a move happen, and you still want to get in because you're well, if it continues to do this again, I'm going to miss out. So you're taking on risk to get into a move after it already happened, basically. So as long as you're okay with that risk, or like I said, when I do something like that, I'm going to size down because I don't know why it made that big drop. So I might size down a little bit, just saying, okay, something's going on. I don't know what. I don't know if it's going to sustain. So that's where you look to volume and stuff like that. But when you see a move like that, there's definitely people looking at it saying, oh, should I get in? I don't know if it's going to continue going down. Should I get in? Oh man, I should have got in. And that's the point where at that point it's already FOMO.
Yeah, the dojis are just starting to form at that point, and but yeah, I was watching Tesla when that happened, and it had been bouncing on, I don't remember exactly, but it had been bouncing off a certain support, just like a brick wall, like 4 or 5 times that day, and then it just flushed out, and then the flush happened, and I did jump in some puts real quick, and just because I only do short-term day trades at this point, and with Tesla especially.
That's not FOMO though, right? So it bounced off support plenty of times when it broke through support. If you're quick enough to get in, that's not FOMO. That's getting in right before most people are looking at it saying, okay, it broke support. Oh, it's still going down. Oh, it's not stopping. Then they get in. So you didn't have FOMO necessarily. You were waiting for the break to happen, and you're quick enough to get in at the right spot where it's not FOMO.
Yeah, I had that thing that Lala mentioned though, which is like the opposite of FOMO. Maybe we can call it mofo, because that's what I was screaming, because
I like that one.
Yeah, mofo. That's it. So I got in, and because I'm a short-term, especially with Tesla, I'm a short-term trader. Sometimes 45 seconds, sometimes 2 minutes. I got out, and it just kept flushing, and I was just sitting there with my mofo. I was just sitting there, watching it. I didn't get back in though. Probably, that was an exigent situation. That was a crazy situation.
And that's the correct response to it, right? That's how you correct it. Oh, I got out too early, and this is what I don't have FOMO at all, because if I miss a move, I just say, oh, I'm not interested in getting in here. One of the problems I do have is getting out of stuff early, because I'm like you, I'm that shorter term trader where I've got cash in my hand right now. I'm going to lock it in. Now, it's not a random lock in. There's a reason why there's a support level here. I might lock it in and not necessarily wait to see if support breaks. So if you do that, and then, the solution to it is you can always get back in. So that's another option for, like, you played it out perfectly. Oh man, I got out too early, but here's a chance to get back into the trade again. And you're minimizing risk because you've already locked in some profits.
Yeah, I mean, I got out maybe 6 minutes after that. I could have gotten back in, but that's one of the things I've learned from you as a mentor, definitely, is to get out.
Don't learn that one from me. I had a Netflix trade on Friday. I closed it out it was something like $2.80 a contract, and then 40 minutes later they were like $7 or $8. So when people say, hey, I don't have FOMO, but guess what? The thing I struggle with as a trader is I do get out of stuff early. There's always scale out and leave runners on, which I don't do. So that's something that I can continuously work on for myself. So you guys can see, if I talk about FOMO like it's nothing, like I don't have it, it's not an issue, it's not a concern. There's other things that I do that need to be corrected. So, I can't sit here and say none of you should have FOMO. That's just one of your issues that you struggle with. It's not for me. But I struggle with holding on to positions longer term where you guys might not. So again, we all just have our personal things that we're working on to improve as traders. For me, it's not FOMO, but like you said, I get out of stuff early as well. And then what I don't do is jump back into it. Sometimes I will, just because that's, you know, a good trade setup. But a lot of times if I close a trade, I'm on other tickers looking for another setups. I don't go stay on the same screen looking for when I can get back into it. So that's something that you've done or improved upon really well. So don't learn the exits from me necessarily. You can learn that if I exit, there's probably further downside or upside depending on what I do. So great job getting back into a trade though. That's, you know, that's one of those things that I typically don't do is once I close the trade, I just look at other tickers for new setups.
Yeah, and you know, Lala, I know that you play Tesla quite a bit, and were you in on that? What was your take on Tesla when the big drop happened? Were you there, or were you in Amazon, or what were you looking at that point?
I had one Tesla contract that I had bought the day before as a YOLO. It was an 865 put.
Oh, nice.
So, and it was really cheap because I usually don't do YOLOs on Thursdays, but I don't know, I had a feeling it was going to go down because it was really close to breaking support already on Thursday. So I got it cheap enough. Yeah. And then by, you know, Friday afternoon, it was worth like 5 times what I paid for it. But my goal, what I was looking at and playing most of yesterday was Amazon and SPX. SPX was one of those ones that I got in and out of several times because I would, you know, sell the contract and then it would pull way back. And then when it would give me that, you know, show me that it was hitting support and dropping more, I would get back in for cheaper. So it was kind of a rinse and repeat, and I'm locking in money along the way. So not exactly chasing, waiting for it to prove itself, waiting for it to hit its head on support and, you know, pull back and continue down. But I was looking at SPX to do its afternoon pop, which is normally what happens. So I was looking at calls and waiting for it to kind of bottom. Last few Fridays, it's been doing that double bottom and then taking off into the afternoon. So that's what I was looking at. And then all of a sudden it just, I'm like, you know what? I'm not doing a call here. This is crazy. Like it's not even showing any kind of indication. And I went puts and it ended up working out really well. But I get a little tunnel vision. So usually if I'm in 1 or 2 plays, that's all I'm in because I'm just strictly on those and watching them. I'm trying to get over being a babysitter, but I'm in and out of my plays. Not quite as quick as Mike, but I like to babysit them a little bit too much. I'm just hyper focused on them. So I'm trying not to be as hyper focused, but it's, you know, it's been working so far. So it's also kind of a fine line between you don't really want to change what works, but you do want to kind of, you know, better what you're doing. But yeah, yesterday was fun. I love days like that.
Yeah, that was something else. It definitely. I know there was like the moderator. Well, on Voice, I know the moderators were giving great advice to people. They were just, I know Kang and others were just saying, you know, be calm. This news came across. We're not sure yet. Let's just wait and see what's rumors and what's. It's just great. All you guys who are just moderators in the community are just great leaders to just sort of. It was very obvious on Voice when they were just sort of. And Mike, by the way, you were doing it the same thing in main chat. I mean, giving advice, people saying, should I do puts here? And I remember you commented at one time, you should already be in puts, you said at one point. And if you're not, just, you know, it's just great advice that you guys give. And as far as FOMO, you've got a trade to kind of go over, Lala, where a member, you know, a friend of yours had FOMO, and also we have this kind of averaging down issue going on. Do you want to go ahead and go through that trade and do that, and then we'll just throw it over, give the screen to Mike, and see what he's got? You want to? Does that sound good?
Sounds good.
Okay. Well, let's just do this then. Let's go to here. All right, you guys can see on the screen here. Just give it over to Angie. Here's a great example of some learning. So, what are we looking at here?
Okay, this was pins from yesterday, and you can see at the beginning, see there where it started, the price started to increase rapidly. This is a 3 minutes, so within 6 minutes, it jumped up in price a little over $2. And my friend was chasing. She got in about halfway, a little bit up from where you're at now, about halfway through that large green candle.
This is her.
Thinking, yep, right there's the entry. She got in there thinking that it was going to continue to take off. and it was above VWAP, and the next candle, it went up a little bit higher, but then, and hit high a day with that wick, but then it came right back down. And then it went sideways. She looked at that like it was a bear flag, and she kind of marked it from that high of day to where the smaller candles are. And then she made the mistake of thinking right after those smaller candles, that next green, taller candle was the breakout candle of the bear flag, the bull flag.
Right.
However, if you look below at the volume, the strongest volume right below that area is that red candle. And then the volume is starting to die down. Also, the RSI, it might have been pointing straight up at that point. But the volume is the main thing that I would have been looking at. I think I would have given another candle or two to confirm, because the very next candle was very small and it has a lot of downward pressure. And even the candle she got in on had a lot of downward pressure. So that's telling me that the sellers are coming in, and then the candles are just getting smaller and squishier. And I call those squishy candles, which means they're running out. The price is getting smaller, and I take that as a sign to get out of a play. But she had already averaged down at that point. So then she's just, holding on for dear life, hoping that it goes up, and it just continued to drop. The blue line is VWAP. Luckily, she got out right before or right after it broke through that. So she did listen there, because I always say if it breaks the VWAP, you want to get out, because that's a major support. So she got out there. The main problem with there's a lot of problems in here, but when the price jumps up real fast like that, the IV is extended. So your contract is going to be a lot more than if the price just went up slowly. So she paid top price for the contract. And then by the time it's consolidated a lot and the volumes come down and the prices come down, even though the price didn't come down that much, her contracts came down a lot because the IV came down so much.
So so she goes in here, or he or she goes in here.
No, she.
She goes in here, and then you said she doubles down here.
Correct.
So was this a typical position for her, or was it a little bit heavy to begin with?
Yeah, well, the first one was around a typical size for her. The second one, when she doubled down, she went in with that same amount of size, which put her at an oversized position. So yeah, it was just a lot of mistakes all the way around.
And so then an oversized position there, and then taking the loss here could be a significant loss for sure.
Yes.
So what about this, Mike? I think this is a great example. Is there any way you would have went in right here? What do you see on this entry? What feedback do you see here?
So for me, like I said, I don't have FOMO. So whenever I see something spike that dramatically, I just don't care. I'm not looking for an entry there, with the understanding that it's likely going to retrace. Now, it depends on why it's popping. If earnings comes out or something and something runs, it might run for an hour or two straight. We don't know, right? You got to understand why something's popping. But typically, and even something like this, if it pulled back and then continued in an upward direction, it's still at some point going to pull back. So with that first big green candle, I'm going to look at that and say, oh, something's going on. With the second big green candle, I'm going to look at that and say, okay, something definitely happened. Let me see if it ever pulls back. And I'm just not looking to get in on those initial spikes like that. Now, if it was a pattern I was looking at, that the breakout was the bottom of that first green candle, I might get in for something like that and be in it already for that. And I'm not saying this is, I'm saying if I was watching the chart for a pattern breakout and if that's where it broke out, I might be in that. But once that big green candle comes in, I'm just not looking for an entry. Or if I am, I'm looking for it to come in after like a nice pullback or consolidation. Because you got to think about, you can go through a lot of spikes like that you just don't understand what happened. Like, oh, why did this just pop like it did? And a lot of times it's going to pull back. And like Angie said, even if the chart itself doesn't pull back, you're going to get that IV bump where a $3 contract might be $3.60, and you get into it, and then 2 candles later, it's at the same price, but those $3.60 entries, you know, they're now $3.20, and you just lost 40 cents, and the chart didn't move.
Yeah.
So those big green candle spikes, or even if it's in the other direction, a big red candle down, I'm not looking for an entry on those. I'm looking for, if it pulls back and stabilizes, you know, that's actually a great chart to go short, because it had that huge pop and then it consolidated and then it lost that momentum. So you could have gone to the downside with it. So when I see green candles like that, and in the chat room, we call them Roman candles because they just shoot straight up. We're just not looking for entries based on those.
You know, that's a lot. That's the experience coming through too, because that's what you said. This has been a great short entry for those reasons. A lot of newer traders, this is where the psychology comes in. You see these big green candles. You've seen the volume bars. We don't have them before this, but probably big relative volume bars compared to what's come before. It seems like, oh, this is it. And there's too much of that to the moon stuff, in my opinion, all over the interwebs. There's just too much of expectation that everything's going to spike and this might be my chance, right? So that's the experience coming in where, you know, you're not going to go in right here. And, you know, Lala, your friend did. And then we get to this notion of, if you would have went in right here, Lala and Mike, both of you guys, if you would have went in right here with a call position for whatever reason, where would you have exited, do you think?
So for me, it's hard to answer those questions because I wouldn't go in there. And a lot of times when we do these chart analysis after the fact, it's easy to say, oh, I would do this, I would do that. But then when you're in the trade, it's a little different because it's your money, it's your emotions. So again, I said this last week when we did this, you can look at something ideally when you're, you know, again, step back, step out of the situation. And that's what journaling is all about, right? Step out of the situation and look at that. And would I have done the same thing? Assuming I entered there, which again, it's hard for me to put myself in that position because I know I just don't enter on big candles like that. But if you did, for whatever reason, enter there, and I can see why some people would, of course, it's kind of consolidating and going sideways. So right, that candle that you're on right there, that red one, if you look at the bottom wick of that candle, and then the next bottom wick of the next red candle is kind of in the same area, I might just put a stop there and say, if it breaks this level here, I'm going to get out of it. And again, you're not too far away from where you entered. And, you know, if you just went across right there, it's just below the break of VWAP also. So I might give it to that bottom level to see if that holds as support. If it breaks that level of support and it's below VWAP, and then whatever that yellow line is, you see how it's kind of right after consolidation, it makes that sharp move downward. That's concerning, even up higher than the blue line there. So if you go further up, right after consolidation, that line starts a sharp decline. And once that breaks VWAP, you've got a lot of things going against you. So I wouldn't want to be in the trade much longer beyond, you've got that yellow line turning down. I'm assuming that's a shorter term EMA. You've got,
maybe
that would make sense. You've got VWAP, it's breaking that. It's breaking below, like the bodies of those candles where it's consolidating, it's below all that. The wick is just a little bit below that even. So in that area right there, there's kind of a lot of things you're looking at that would say, I don't want to be in calls when it gets to this level here.
Yeah, and going out when a trade is invalidated is, you know, people who, and it's very common, of course, will just hang on because, oh, look, maybe you're right here at the close of this candle, it might be going back up, right? But here's green, maybe this will go back up. So definitely this idea of just hanging on too long is something that I'm hearing a lot from people. Not only are they going in maybe on FOMO or bad reasons, but like, when you're wrong, you're wrong, and it does take time experience to be able to cut. So the fact that your friend, you know, or member cut here, I mean, that's pretty good. It's similar to where Mike just said he would have cut. Now, I'm also imagining, Mike, you would never do this part, which is where the person doubled down, you know, right here, added to the position
That is a 100% absolute zero, no. Don't ever, under any circumstances, if the Pope knocks on your door and says double down, you just don't do it.
Come on,
Doubling down,
the Pope.
I know why people do it. And it makes sense when you think about it. Oh, well, I want to get out of the trade sooner, so if I lower my cost, it doesn't have to go all the way back to where I bought it. I get it. You just don't double down. As an options trader, it's going to work from time to time, of course. But in the long run, if that's your strategy, and think about it, I have a $100 limit for losses. That's my maximum risk exposure. And I'm putting myself in a trade where I've lost $100. I'm now going to put myself in a position where if it doesn't recover, I'm going to lose $200. No, that doesn't make sense. If it recovers, yeah, you're doing great. But if it doesn't recover, maybe you have a $1,000 account and you put $500 into a trade, which you wouldn't do. But if you double down, now your account is in that trade. If it doesn't recover, you don't get another chance. You're out. You're done.
Yeah, you know, that's the whole averaging down thing. Like, I used to have those issues for sure. For exactly, you just I never went super huge into positions, but you know, my 2 contracts would become 4 contracts because, you know, of lowering the cost basis, I can get out earlier. So I used to be, and I think this is very common, the mindset for averaging down is bad when it includes, okay, I can get back out even earlier. That's a different paradigm of thinking.
There's a distinction here. Yeah. So if my maximum risk tolerance is X dollars, and I open a position for X dollars and it drops, you know, 30%, so I want to lower my cost. No, you are at your maximum risk tolerance with your position. Now, if my maximum risk tolerance is $500 and I open a position for $250 and then it drops 30%, I can now expose another $250 because my maximum risk allotment was $500 and I only put $250 in. So now that it dropped, if I put that second $250 in, now my total exposure is $500. That's not averaging down. That's saying I'm going to start a position here in case it doesn't pull back. But if it does pull back, you know, I want 10 contracts, but I'm only going to buy 5. So you know your exposure is 10 contracts, but you don't have 10. So if it pulls back and you add 5 more, now you have 10. That's your exposure. That's a different strategy than my max exposure is 10 contracts. I'm going to buy 10 contracts. It's now cut in half, so I'm going to buy 10 more. Because now you're exposing more capital than you intended to. So there's a difference between, because some people ask me about this all the time. They go, well, you know, I thought it might pull back, so I wanted 10 contracts. I only bought 5, and you're telling me I shouldn't buy another 5 when it hits support. No, that's a perfectly rational strategy. You wanted 10, but you only bought 5 because you think it can pull back. So if it does pull back, now you have your 10 contracts. If you want 10 contracts and buy 10 and then it pulls back and you buy 10 more, well, you wanted 10 and now you have 20. So it's 2 different concepts with that. Averaging down and averaging in. They're not the same thing. It's a different mindset of why you do one versus the other. And I think people get that confused.
100%. Yeah, that's one of the first things I learned was averaging down is not, the term I heard was scaling in. Like you just said, the original plan was I'm going to have 10 contracts. I buy 5 now and maybe I'll add some later when they're cheaper. But you were planning on 10. It's not
right.
Like,
so that's scaling in, and that's fine. That's a legit strategy.
That's right. So
it's when you want 10, buy 10, and then buy 10 more because it didn't work out. That's not good.
Well, that's what I used to do. I would buy 3 contracts and, oh yeah, here it is. I'm right here. Oh yeah, I'm gonna get 3 contracts. Here we go. Okay, good. Oh no, and I'd start going down. I better buy 3 more right here so I can lower my cost basis so I can get out even. And then it's like, what are you doing? You know,
I want to laugh at how dumb that sounds, but I told you the story of when I first went full time, so I can't.
What can you give us a paraphrased version of that? I mean, what do you think? Give us the short version, or should we just plug the podcast?
The short version is basically I started to go full-time trading with a $20,000 account. I bought a ticker that I traded pretty much every day with $5,000, and it turned against me. So I put in another 5,000. Turned against me. I put in 10,000.
Wait.
Well, go ahead.
Wait, everyone. This is 7 Star Mike. here and everyone, this is the person who has taught me and so many other people. Do not spend $5,000 in the position if you have a $20,000 account. That's 25%. Don't do it. You're saying
Yeah,
when you
you wouldn't
started.
want to do that, but I just started full-time trading. I knew this ticker, it was going up.
Of course.
It was gonna go up. I'm putting 5,000 into it. Well, it didn't go up, so I had to put another. You see how I use that term? Had to. That's how losing traders talk. I had to put another 5,000 in. So now I have a $20,000 account, but 10,000 is tied up in this stock. Well, it didn't work out further. So instead of putting another 5 in, I just said, well, hell, I'm going to double down here and put the other 10 in. So I have a $20,000 account. Realistically, I think it was like 18,000 out of the 20. So I didn't double down everything. I saved like a few pennies worth. So I had $18,000 out of a $20,000 account in this one ticker. And that's how I started my full-time trading career with, I don't know, there's probably 19 mistakes I made in that one trade. So I couldn't trade anymore because my entire capital was in that one trade. Luckily, it worked out and I made all my money back. But yeah, if it didn't work out, I would have 2,000 out of a $20,000 account to trade with. And I probably would have been so pissed I wouldn't have been able to do anything with that 2,000.
Oh,
so
no.
yeah, my first trade was averaging down, 2 or 3 times until I had my entire account balance in one trade. So if that trade didn't work out, there would be no 7-star talking to you guys today.
You would have been wearing that name tag saying, welcome to wherever. May I help you
That
out?
would have been me. And I'd be looking at all these guys on the interweb going, oh man, I used to try to do that. And I want Lambo. It was a good experience. I'll be honest with you. It was a good experience. But
I'm sure
had it not worked out, I wouldn't be trading today.
Oh man, that's so that. And by the way, everybody, that full story is on his 2-part episode on Riverside Chats, which is definitely available all over the podcast player universes. So Lala, did you, you're a full-time trader and you've been trading less time than Mike for sure, but like, did you ever, Lala, have like that same kind of like disastrous first trade almost on the edge of losing it when you were first starting, or no? Because you seem very logical. You might not have done.
Yeah, not like that. For the first couple months, I got lucky and I kind of broke even. So I would win a few days and then I would give it all back, usually on Fridays. Fridays were my worst days. I would go a lot of 1-day or 0-day contracts, and yeah, so it's kind of a repeat the first couple months. Well, my very first trade was actually an AMC trade back when AMC was blowing up. And I thought I was a genius because I turned like $3 into 3,000, and I mean 300 into 3,000. So I thought I was a genius. I was like, oh, this is easy. I've got this. I knew how to trade. Anybody can trade. Well, the market quickly showed me how wrong I was. Yeah. So I spent a lot of time just kind of going back and forth, kind of breaking even. Well, not a lot of time, a few months. And then I got to the point where I'm like, okay, this is done. I'm spending way too much time, and I'm, living stocks, breathing stocks, like 24/7. Any extra minute I get, it's all about the stocks. So I've got to buckle down and be a lot more strict with myself. Once I did that, then I started becoming profitable. I was profitable about around, month 5 or 6, like profitable enough to where I could, pay my car payment, pay some groceries. It was kind of, I looked at it kind of like child support because I didn't get any support. So that was a big help there. And then once I saw that, and then I started seeing all these other people, our moderators at Black Box, how well they were doing and how much I loved it. And I started to really, not like my day job. The more that I love the stock market, the less I wanted to be at my day job. And that's when I just decided that there was nothing else in this life that I wanted to do. Like, this was my calling. I wish I would have found this years ago. I'm good at it. I love it. I could talk about it all day. And that's when I just went full force. And then this January was actually, to date, has been my best month ever. And it blew me out of the water how well I did. And it's all thanks to Black Box. 90% of my education came from Black Box, 7-Star Mike, Mel, like all the moderators, the classes. It works, but you definitely have to work it. I went to all the classes a bunch of times, asked tons of questions, and just lived it for a whole year. But it's paid off. It was worth every moment.
And now you're just all in. That's amazing. You know, I will say, I think that's officially like the 5-month figure. I think that's officially the like the shortest amount of time I've heard of anyone like being able to be consistently profitable and like in a year going full time. That's really phenomenal, and that's a great part of your story. So I do have a question here in the chat, but quickly though, back to this chart. So how did you counsel this friend of yours? What did you we heard Mike's take on it. What did you have to say when they brought this to you and they're struggling with this loss, which probably was what, a good 30% loss, maybe, possibly? All that
Yeah,
IV,
at least
who knows?
they didn't give me the exact numbers, but they weren't happy. And the first thing I said was to look at the RSI at the beginning. It's already, super high. It's completely overbought. And for one, if you're going to get into a call like this, you would want to wait on a call on a pullback. For two, you don't want to get into a call when it's already completely taken off. The entry point for me, the way I play, is when the 9 crosses the 89 and VWAP. So it would have to cross both of those and continue going. I don't usually play smaller stocks like this though, so that's why I use the 89. It works for me because I usually play like Amazon, Tesla, those kind of stocks. But just the RSI being so oversold and them getting in there, like where else is it going to go? It's going to do nothing but pull back. And then instantly, that very next candle, it had so much pressure coming down on it. And then it being such a large red candle, that's a huge sign to me.
Yeah.
And then if you look at that RSI,
I don't like that candle. Like that is a lot of volume for this candle, you know, and it's mostly red. Like that is a bunch of volume. I don't like that at all. That would be what I don't like about it.
You can tell that it's not just the bulls taking over. It's the bulls and the bears fighting, trying to take over. Right. And you don't want to be in the middle of that battle. And then right after, the second green candle, then you have that long red candle. If you look down at RSI, while it's supposedly consolidating, RSI is just dropping.
Dropping, yeah.
It's going straight down. It's not showing me that it's consolidating. So I would probably, if I stayed in till the point where they average down, if I was still in at that point, I definitely would have dropped it. See those next 2 candles? They are barely green. They have so much pressure coming down on them. I mean, a little bit more pressure, they would be red candles, and they're so small. Yep. I would have gotten out probably right when it broke the 9. That's the 9 EMA. I would have broke out probably right when it broke that.
Gotcha.
Or even that lone red candle there, one of those candles in that area. I don't even know if I would have waited for it to break VWAP, even though a lot of times I kind of go back and forth. Like usually a safe exit is when the candles start to form on the other side of the 9. But a little bit more to give your stock a little bit more breathing room, then you can use a retest of VWAP. If it holds and continues, stay in. If it loses it, then you can get out. But at that point, the way RSI is acting, and considering that with that green candle, the RSA came up about halfway, but then it turned and went back down. So there at that end, there's no volume right there. So there was not enough volume to even push it up to the top. So I would have been out right around there.
Yeah, I'm big into volume. I'm thinking that volume definitely tells the story. Like I like to have my volume I don't like the red and green volume. I found that's kind of messed with me. I just like to have the volume the same color, but that's just a thing that helped me out a lot for some reason. When I take I'm looking at volume almost as much as price action, sometimes even more.
Oh, for sure. But that tells the story.
Both of you guys are saying they were maybe looking at this candle shooting up to the moon, right? And and you both are mentioning there's info here, there's info here, there's info here, there is data here saying this is not the place to be, and right here there's data here and elsewhere saying this is not the place to double down. And it's interesting how there's data. That's all a chart is visual representations of data. And there's a lot of that here. and this person got caught up in it, and that is what it is. They took a pretty heavy loss.
Yeah, one thing I learned too a while ago is that sometimes people are zoomed in too much. So you zoom in to get a better look at the candles, and sometimes you don't zoom out enough. And if you would just zoom out, you would get a much more clearer picture. Sometimes you wouldn't sell too early because you would see, wait a minute, I'm still above VWAP, I'm still above, my 89, I'm still above everything that I need to be above. But when you're zoomed in and you get that little bit of a drop, it looks like a much larger drop than it actually is.
Yeah.
So I think a lot of times I had a problem with that for a little bit, was just staying zoomed in too much, right? If you just zoom out, get a picture of the whole thing, it really can open your eyes to what's actually happening.
It's interesting to me that with these things that we're seeing, this is a 3-minute chart. It's interesting this person's using the 3-minute. I mean, that's good. A 3-minute is definitely a zoom out perspective for someone who's going to get in on an onrushing, big sweep up, thinking, oh, getting caught up in FOMO. In my experience, it seems like that typically is people who are going to be on a 1-minute, and that can be more psychologically, effective, when they're on the 1-minute. So, she is on the 3-minute, which is great, but it's interesting. That's just an interesting part of this puzzle that I see here that I find of note. I don't know. What do you think, Mike? Is the 3-minute, this person using the 3-minute, does that add to the analysis or no?
So I trade 1-minute charts, and I'm starting to use 3 minutes. For me, I don't trade pins, so I don't know how it moves. For me, it depends on the ticker and your trade intentions.
Yeah.
Like if you're trying to swing from one day to the next or for 3 months, you don't want a 1 or 3. So if the intentions here were to scalp, I would want a 1-minute chart. Maybe 3 minutes if you're doing scalp, possibly turning it into a day trade. So I would also want to know, like, I don't trade pins. I don't know, like at the bottom before that first big green candle, it's 25.80. At the very top wick of the red candle, it's 27.80. So that's a $2 move. So I would want to know, does pins normally, can it do $2 moves? If it normally does $2 moves, maybe you can do that 3-minute time frame or 5-minute, because it normally has this big range. You don't have to watch every little tick of it. So it depends. I don't know. Like I said, I don't trade pins often. I would be on a 1-minute chart with a 3-minute chart next to me. That's how I'm trading right now, trying to get a feel for which one I like better. But I'm basically trading off 1-minute charts. I don't think a 1-minute versus a 3-minute would have a great impact on this, other than the 1-minute might actually show FOMO. Even like if you put this chart on a 1-minute chart, it might make you FOMO into it even greater.
Yeah, that's true. That's interesting.
Because you're going to see more of those green candles piling up next to each other on that, that big green, then the little red, then the big green. That's 9 minutes worth of information. So you're going to see 9 candles instead of 3. So that just might make it look like it's like, oh my God, it's moving, it's moving. I got to get in. So sometimes the smaller time frame is going to make it look a little bit less, I guess maybe a little bit less aggressive.
Yeah, I kind of give it up for this person for using the 3-minute candle on this, because hey, here's a question that's great. This is a great question. I mentioned the volume color a minute ago, and you guys are both way more experienced than me. Like, the idea is, what's the idea behind having the volume the same color? Like with me, I'm curious if you guys use colored volume candles or not. I know with me, I like to have the volume the same color, because I like to think of it as, the volume is coming, and how the price action forms kind of tells the story of more sellers and buyers. And just for me, for some reason, maybe just because I'm weird, if I see red or green volume candles, it psychologically predisposes me to just make worse decisions. So I like to have the candles, the volume bars, I should say, just all one color. So Mike, how do you do volume candles on your charts? Colored or no?
Mine are just standard for whatever charting platform I'm using. I've never changed them.
So you don't care either way?
I don't care what color they are. I'm basically looking, for me, the only thing I use volume for is relativity. If I'm looking at a move, is volume greater than what it normally is, or is it less? I don't really pay attention to, like, the colors are just going to correspond with the bars themselves. So I'm not really looking for, well, this one's red, but that one's green. I'm looking for, we're moving up. Are we moving up on increased volume, or are we moving up on lower than average volume? Well, there's a big spike here, and it has a big spike based on, 2 times the average volume. Like, something like that is what I'm looking for, not necessarily, well, the last candle they were buying and it was this much volume. This candle they're selling and it's that much. It's just, in general, is volume increasing or decreasing relative to the average trading? So, I mean, you could technically put them any color you want, and I don't think it would really affect me too much, because I'm not focused on which color each volume bar is. More just, is it greater or average or less than average volume?
Yeah, sure. What about you, Lala? What do your volume bars look like?
I like the colored. This is my chart. I didn't play this play. She gave it to me, but I just took the screenshot from mine. So these are the exact lines, the EMAs that I use. I use RSI, and I like the colors. I just like everything to match more. I don't really care about the actual colors themselves. I just use it for how much volume is there, but I just like it to match the candles themselves. That looks better.
Well, that makes sense. Yeah. So yeah, so there's your answer. I'm just weird out there. I know. It's just, I don't know. It's one of my things. I like to have the volume kind of all one color, very mutely kind of in the background, because it just probably because I'm weird. So people have asked up here. Oh, I see. Okay. So people have asked, like, what percent per play, do you recommend? And I know that it looks like Mike has left an answer there, but so what's your take on that, Lala? Let me find the question here and make sure that, all right, so what do you recommend for risk percentage? This person keeps hearing 1 or 2%, etc. So big account, small account, what advice do you have for, like, risk percentage per play, Lala?
I'm probably not the best one to ask for that. I have a very high risk tolerance. Sometimes I take trades that are a little more risky. I play the bigger stocks. I like stocks that move really fast, but I'm a very fast thinker. So I don't really go by a percentage. I go just by complete price action, make sure I'm following the trend and can get in and out green. So I'm not the one to ask for that kind of question.
You don't have an idea of, I'm not going to pay more than 1% of my account for this particular trade, those types of things. So you kind of just kind of play it.
No.
Okay.
Well, if you look at my Twitter, you can tell that I've had a contest where I started with $500 and I turned it into almost 6,000 within 2 weeks.
Well, you're not doing that with a 1% risk per trade.
Yeah, that was not following the rules. It was a small account I just opened, and I could have lost all of the money and been fine. I was just kind of pushing the limits to see what I could do. But I'm careful. So, I have those set of rules. I stick to them. If my play invalidates, I'm out quickly. I make sure that my losses are much smaller than my wins. So I'm calculated in those areas. I'm just not as calculated in, like, the percentage wise as how much of my money that I should spend on a play.
Okay. And what's your perspective, Mike, for other people? What do you recommend as far as percentage per play, risk tolerance?
So you'll commonly hear 1 to 2% per position and no more than 10%, or, well, hard to say that one. So no more than, we recommend 20 to 40%, depending on, your risk tolerance and experience of your entire account exposed at any one time. So each position, no more than 1 to 2%. It depends on a lot of factors. You can't give a standard response to this one. So if you have a $1,000 account and you buy a $300 contract, that's way more than 2% of your account. But if you have a $1,000 account and you have experience with options and you know what you're doing, I would comfortably put a $300 contract in a $1,000 account. If someone's brand new to trading and all they have to their entire net worth is $1,000, I would never recommend that.
Yeah.
So it depends on what now let's say you have a net worth of, or your trading account is $100,000, and you take $3,000 set aside to do ER trades or risky YOLOs or whatever, and you don't care if you lose that 3,000 because you have 100,000 in your actual trading account. You might say, you know what, I've got 3,000. Hey, what the hell? I'm going to put 1,500 into this trade here, right? So it depends on what you're trying to do with that money. Generally speaking, if that's your entire account and that's your only account, you don't want to put 10% of your account, 5% of your account in any single trade. But the smaller the account, the more you're going to break that rule.
Sure.
With $1,000 accounts, how many contracts are you going to find for 2%? Yeah, they're out there. And if you're Jenny B, you smoke the crap out of them. For most of us mortals that aren't Jenny B, though, finding those repeatedly, those $50 contracts for a smaller account, I'm an experienced options trader and I can't do it the way Jenny B does. So it's just, that works for her. But for me, I can't find those 1 to 2% type, with a smaller account type of trades. And you kind of have to also say, if I have $1,000 account and I have, an $80 contract in it, if it's up $20, you can't look at it and say, oh, it's just $20, I'm not closing it, right? So that $20 represents a bigger percentage of the trade. So using those percentages, I think it kind of messes people up sometimes, but there's no standard answer for it. You'll typically hear 1 to 2% per trade. And then most of us will say we don't have more than anywhere from 20 to 40% of our account exposed at any given point. And that's going to depend on your experience, your risk tolerance, your intentions, why you have that account, is that your only account, et cetera. So start with those basic guidelines and then play with it depending on, those excess parameters.
Yeah, it's all about your individual risk. In the intro class, I mean, one of the things we talk about is you control how much money you lose, along the lines of you control how much money you're spending on a play, right? If you're buying common shares or if you're buying call, whatever it is, I mean, you're in control of how much you buy, right? So
that's what's fun about options is people say, oh my God, options are so risky. And in a sense they could be, but in a sense they're not. Right? If you have $1,000 account and your risk tolerance is, hey, you know what? If I lose $80, it's going to suck, but whatever. Well, then find a single contract for $80, buy it. And if it goes to zero, you're within your risk tolerance. You don't want it to go to zero, right? But if that's your risk tolerance, $80 out of $1,000 account, if you buy one $80 contract, the most you can lose is your max risk. So it's not going to hurt you.
That's right. Yeah, that's exactly the defined risk of options is what drew me into it. And it's funny, we talked about my mathematician wife. She definitely suggested options is a more reasonable play just because of that exact thing. The idea of defined risk is golden. If I buy whatever $55 contract, I'm not losing any more, or 55-cent contract, I'm not losing any more than that, no matter what happens. So if you position yourself small, thinking, can I take a total loss without much pain? And if the answer is yes, then you're in a good place. And I know this past week, I don't know, people are DMing me a lot, talking about issues they're having and when they lose stuff. And I joke that I'm kind of becoming everybody's bartender, but I love it. I've been hearing a lot this past week, last couple of weeks, where people have been just taking heavy losses, right? And that's just part of it. I don't think people are really considering, what is their risk tolerance? Sometimes people have to lose a big amount before they really think about that. And people need to stop doing that. You need to really think about, what can you afford? This is real money. What can you afford to lose? And it's just a thing that keeps coming up. And you're right about Jenny. I don't know how she finds those plays all the time. I'm in at something, she goes in for something at 32 cents and then, it goes to 75 cents just all the time. Do you know anything about her secret sauce?
Yeah, she's Wonder Woman.
Well, it is.
She puts on the Wonder Woman outfit, sits at her computer and finds these trades. There's no other explanation.
Yeah, I totally agree. Well, what do you think, Mike? So we got this trade on the screen. We've kind of gotten from FOMO into averaging down, that idea of scaling in and averaging down. are very different. Whenever you're ready to take the screen and give us what you got going on, Mike, just let me know. Lala, do you have any other comments about this play on the screen? Any other things you told the trader, or anything at all?
I don't think so. I think we covered most of it, or all of it.
Yeah, that was a good one. So what do you think, Mike? You ready? You want to give me
Yeah, mine's a really super quick example of what FOMO can do. So if you want to switch it over to me, this will literally take probably no more than 2 minutes. Then we can kind of run into a general Q&A session and wrap up if people are ready to go.
Yeah, definitely. All right, there you go.
Okay, so on the screen right here is Twitter. Twitter is one of the trades that I take, or it's on my screen regularly. So there's a few tickers that I like. I've got multiple monitor setups, which you don't need in order to trade. It's just I'm comfortable without switching screens to get from a chart to a trade entry. So I've got my system set up so I don't really switch a lot of screens. So one screen is tickers that are going to be low price contracts, and Twitter is one of them. So I kind of look at it and trade it somewhat regularly. You can scale in nicely on these or take big positions, and they can move pretty well. So I like Twitter. One of the things I look for sometimes, and I don't do a lot of after hours research. So in the morning, what I'm going to do is pop into this. This is a 1 minute chart. And so this is after hours here, or pre-market. What I'll do is go to the prior, if I can speak right, the prior day's low, and just mark that level there. I don't actually put the line on my chart for the most part. I'm just kind of watching where it is, but to make this easier, I'm going to put the actual line on the chart. So that yellow line there is the prior day's low. You can see big volume going into the close, and then it gaps up in the morning. As we get closer and closer to the opening bell, it bleeds off, gaps up a little bit more, or starts moving up more, and then it just completely bleeds off as we get into the market actually opening. So one of the things I'm looking for at this point is we gapped up, we have this big bleed off here right down to the prior day's low. So if it reaches this area once the market opens, I might look at that to take an actual trade. So if you look, and this is going to be hard to see because it's right on the very edge, but I'm going to advance the screen to make it easier as I talk a little bit here. Once the market opened, it dipped to about that level. It's not quite all the way down there, but it's about that level. So I'm going to move the screen over a little bit, and what you can see is some big volume coming in here, right? We've spoken about volume a few times now. So at the end of the day here, you have this massive volume, it gaps up. Once the bell rings, we have volume that's almost equal to what it was, not as much of it because the time frame hasn't gone by, but the level of it, right? You can see these big candles up here, and then you can see this big move. So again, yesterday's low, when we opened, it went down to that area, not quite, but close enough, and then it started climbing. So you might be inclined to take a call position here. And then as I pull the chart over more, you can see it keeps going up and up and up. So at some point you look at this and go, oh, Twitter's on fire in the morning. I'm gonna look for maybe a call position. And then as we keep going up, you can see it spikes again. And you're going, oh my God, I gotta get into this. This is FOMO. Yeah. Okay, so it started down here at 36.25. The peak up here is 39.09. All right, so that's a good move in the morning there. Now, again, one of the things I say is it's a lot easier to look at a chart after hours and say, well, I would have done this, I would have done that. Some people do that on Twitter, and you look at the rest of what they post and you go, no, you wouldn't. Like, I know you wouldn't have done that. You're saying that because you can see the whole chart. In real time, based on what I've seen you post, you wouldn't have done that. So if we go over to Twitter, this is that specific day. And what I'm posting on here, see that big volume bar on Twitter? You might be tempted to go long right there, but with VWAP just ahead, it's a caution. And this is going to be the level that I'm looking at here. I'm going to show you when I move over back to the chart. But what I want to show you guys with this is that here's a big move, and I'm telling people, don't get into the trade just yet. It made this big move. Hold on, it's not an entry yet. So FOMO would say, well, look, it's moving up, it's moving up, it's moving up. Oh my God, it pulled back and moved up again. I've got to get in. If you get in right here, and so this is pre-market right in here. If I can get this to line up, there's a level of support for the pre-market action, which became resistance here. So on Twitter, I'm telling people, yes, there's a big move here. Yes, there's some decent volume, but watch out because you've got VWAP right there. And that corresponds with a level of support pre-market that might be resistance here. So anytime you're looking at this chart, up, pull back, up, pull back, up, pull back, if you're not in somewhere down here and you're watching it run, 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 you've got to be aware that there's a support level here that could turn into resistance. We don't know that ahead of time, of course, but support can become resistance. And in this case, it did temporarily. We'll see what it does further when I move the chart over. And on top of that, some people like VWAP. So when they ask me a question about a chart, I'm going to point out, well, you know, VWAP is right above you here. So you've got two reasons not to get into this trade if you didn't get in somewhere down here at the very bottom. So if you're watching it climb, watching it climb, watching it climb, pulls back, watching it climb, that would be a FOMO entry where someone would say, oh my God, it's just not stopping and I've missed a good $2 move, $2.50, whatever it is, I've got to get in. You've got to be aware of their pre-market support can become resistance. And then over here, there's VWAP just above it. So there's two reasons why you don't want to get into the trade right here, thinking, oh my God, it's running, it's running, it's running. No, you might have missed it already. And if I pull the chart further, and pull the chart further, and pull the chart further, now this is into Friday, this is the next day, it never got anywhere near that level again.
Yeah.
So as far as FOMO goes, if you see all this and then we're looking at the volume and you're not paying attention to the pre-market support could become resistance, the VWAP right above it, if you look like, oh my God, it's not stopping, I got to get in. If you didn't pay attention to those other two things, look what FOMO would have done for you. It never got anywhere near that. And if you took a weekly contract on Thursday, by Friday, they expired worthless. So like I said, I don't have a personal example because I don't have FOMO issues, but I've got, you know, don't think I'm a perfect trader. I've got other things that as a trader I can improve upon. FOMO just isn't one, so I don't have a personal example, but I'm using this one because someone did ask about, hey, Twitter's running, should we get into it? And to show you guys that I do in fact do this in real time, it's not just looking at a chart saying, oh no, I wouldn't have got in there. Because realistically, we don't know that, right? What's your mindset? What's the rest of the market doing? We don't know if you would get in here or not. We can look at it after the chart completes and say, well, no, I wouldn't. So to show you guys that I do look at this stuff in real time, that's the tweet that came in Thursday that was saying, hey guys, watch out for Twitter. It's not an entry, even though it's running. So FOMO would have just completely destroyed you. If you got into a weekly, it would have expired worthless the following day.
What a great trade from your line on the bottom, though. If you would have gotten in calls based on that previous day support level you had and rode it up to basically the top of that, where it.
That's one of the ways that I will trade.
Yeah, that would have
been. Right, it had a level of support yesterday. It's coming down, testing it, and it's holding as support. Now, again, it didn't quite get all the way down there, so it wouldn't have been a perfect bounce, but it was literally off by like 3 or 4 pennies. Yeah. So if it gets down there and then you see it bouncing, if you trade at the opening bell, that's one of the things I look for. So you might get into a trade here and ride it up to potential resistance here. We don't, again, it's easy to say it's resistance now, but we don't know that in the heat of the moment. But using that pre-market level that was prior support could be resistance. That's one of the things I look at when I get into a trade. Is I don't know the future. I wish, oh my God, I wish I could see the future, but I can't. So what I have to do is where could things happen? Yeah. Because this is prior support pre-market, it could become resistance. You don't know when, you don't know where, but in this case, it did get to that level. You can see it breached it a little bit, of course, but it closed below it and the next candle was below and it never got above that again. So do I know this pre-market support is going to be resistance? No. But in the back of my mind, I have to know that it could be. So if I'm in a trade here and it gets up to this point and it rejects, that's where I'm closing the trade out. And I can say that having looked at the chart afterwards, because I know that's just how I trade. It's not me saying, well, ideally you want to get out here. Well, of course, we all want to get out at an ideal spot, right? Duh, that's why we trade. We want to get in at the bottom and close at the top. But one of the things I look at are these pre-market levels. And if that becomes a support level, I'm going to look at that as a potential resistance. And when it actually holds as resistance, it's not a theory. That's where I would actually close the trade. Yeah. So that's my FOMO piece. It's not an actual trade because again, I don't I just don't suffer from FOMO. I'm very comfortable watching something run if I'm not in it, not jumping into it. But the problem is very real. A lot of people have FOMO. It's all over the chat room when something's running. You'll see, especially Amazon and Tesla, because they move so much, they might be, it opens the day and then it's up $45 for Amazon, or even Tesla can do 45 bucks, right? It's up 45 bucks and then it's consolidating and someone says, hey, is it a good time to get in Tesla? And you look at the chart, you're like, what, now? You didn't like it 45 points ago? What, why? No, it's not a good time to get in now. And it could go another, 15, 20, 30 points, who knows? But if it's already run 45 and then it's, leveling off a little bit and people say, hey, do you think it's a good idea to get in now? They're pissed that they missed that 45-point run. And if it runs another 45, they want to capture that. But again, we can't see the future. We don't know it's going to run another 45. So you've got to take into account your risk tolerance. It already ran 45 points. That's going to be risky as far as a potential pullback. So do you want to get in assuming the risk that it could potentially pull back that 45 points? But so anyone asking, hey, something's running really good, do you think it's too late to get in? That's FOMO hitting you right in the face.
Yeah, I see people sometimes, like on Tesla, it'll have gone up, like you just said, maybe 40 points or something, and maybe it's still going up, but it's 5 or 6 points from like a really solid possible area of resistance. So I think what you're getting at with just knowing pre-market levels and just always improving on charting, that's one thing I always personally am trying to improve upon, because the chart, the data is there, probabilities are there, we don't know. But that's another thing too. Do you want to get in when you just have a relatively small amount of upward momentum to a serious resistance, or do you want to maybe wait and try to play that to the downside? Or
get in. When people ask about risk reward, that's where that comes in. Like, so people will ask you, hey, what's your risk reward? To be honest with you, I don't know. I don't calculate it. I don't have, well, I've got to make, risk 1 to make 3. I don't do any of that. But unofficially, I can look at a chart. So let's say you're looking at this support and resistance level here, right? And let's say it hits this resistance level and pulls back. I can look at this chart and say, if it holds here as support, the move to potential resistance is going to be 90 cents from here to here. The move back to potential support is going to be $2 from here to here. So I'm not calculating anything in my head, but I can look at the chart and say there's potential $1 move or 90 cents upward, and there's potential $2 move downward. So the risk reward doesn't make sense to get in here unless you see something holding as support and moving up. So while it's consolidating, you don't want to get in. If it broke out of this to the upside, that's different, keeping in mind that it could potentially, reject here again. But so I don't do that risk reward kind of mathematical equation, but looking at the chart, you can just immediately go, okay, if it's consolidating here, if it were to move up, the upside move is only 90 cents, the downside move is $2. The risk reward is skewed against you. Right, so FOMO, that's a big thing in FOMO, right? Risk reward. If something's running, if you get in at this point, do you have more risk or is there still more reward? And that's something that experience will get you. And the more times you get involved in FOMO trades and lose, just like touching the stove, at some point it's going to hurt so much that you just stop touching the stove.
Hopefully. Yeah, the risk reward thing is interesting. Sometimes I'll scalp options, and I'll get a an $1,800 contract and just be in there for a little bit and make 150 bucks and get out. And I've had people DM me and say, well, what's the point in risking 1,800 bucks to only make 200? So that's where I don't worry about it in that frame of mind, because you're not risking the $1,800. Right? I'm not going to let it go to zero. You're risking whatever you're willing to lose, which you control based on your exit abilities. So I think that's an interesting topic too, this idea of risk reward, but also like, people want to get certain profit ratios. And yeah, I don't do a whole lot of that either, really. I just see it like this is a possibility to make a couple $100 in a minute and a half. That's how I see it. Lala, what's your risk reward approach? Do you just use charting? Do you formula it out? What's your approach to that?
And you can take the screen back to put it
Okay.
on something more enjoyable to look at while she's talking. I've got nothing more on this example here.
Sounds good.
I strictly go by price action. I have rules when I will get in and when I will get out. I try really hard not to look at my P&L until the end of the day, or at least the end of the trade, because back when I was watching my P&L, I would definitely get out way too soon a lot of the times because I would hit an amount I thought was acceptable for the day. So I would get out in fear of giving some of it back. So now I just let the chart completely tell me exactly what to do, because the market's good about that. She will let you know whether you're a bull that day or a bear. She'll let you know when it's time to get out. You just have to watch for clues.
Interesting, this female personification of the market. I've noticed that, like with a lot of traders. It's that's interesting. Okay, so again, so you guys both are just, you're chart based, of course, but the idea of, it seems like price action, is kind of ruling supreme. And a lot of people will approach that with, they don't want to risk X amount unless they are extremely high probability of making 3x that amount. And I've just never really been in that camp personally. Doesn't mean I'm right. I could be wrong, but it sounds like
I'm not against it necessarily. Like it's a good, like if you want to be a full-time trader, you've got to be aware of your profitable trades have to have more upside than downside,
right.
Or your trade entries rather. Like you don't take a trade if you have more risk than reward. It wouldn't make like mathematical sense. Right. The more trades like that you take, statistically and mathematically, you're going to end up blowing up your account, unless you have like a 95% profitable rate, which most people don't. So I'm not against it, and you need to be aware of it. Yeah. It's just one of those things that, talking about FOMO, that's an aspect of FOMO, is that you're taking on much more risk than potential reward for that trade because you've already missed the optimal entry.
Yeah, and I know people who will take a stance on that where they won't take profits at, say, 25% because they have to get 50% or some other higher percentage before they will take profits. And if something's coming up on the chart and the trade is slowing down, and what did you say, the candles are getting squishy? Is that what you said? And you're 25% up, don't let that fade away just because you're not at your prearranged 50% profit target.
Yeah, that's the quickest way to let your trade go red, is expecting 50% or 100%. Like Mike always says, the market doesn't care what you want. So if you wait to get that 50%, 100%, I mean, if it's going to give it to me, great, I'll take it all day. But as soon as it looks like it's not going to give it to me, I will take what it's going to give me and be very happy with it.
Yeah, no doubt, no doubt. It seems like, especially the last few weeks, it's been a very green. I know in the chat, in main chat, we've kind of become just really scrappy scalpers, right, Mike? It just seems like that's been ruling the day. The orb has just taken off, and it might be changing a little bit, but I think there is a lot of green and gone mentality, which I fully, that's my trade style.
To be a full-time trader, you want versatility. Right. So we're in a market where you can buy something and sell it, 6 months from now. Well, that market stopped, right? That market ended in November. Since November, we've been in an actual market where if you buy something now and you just intend to hold it, whatever hair you have left is going to go gray, and then it's going to fall out because we're just going up, down, up, down, up, down, up, down, up, down. Yeah. So we're in a market right now where, to me and a lot of people that are out there, it's just that mentality of, we're in the market where you've got to be short term and quick and nimble. And if you're in a position, be aware that it can change on a dime and turn against you rapidly and dramatically. So you just have to be aware of the market conditions. Prior to November, you can buy something and hold it for 6 months. Now, these days, I can't see 6 months from now, but I don't want to be in a position right now that might be 4 months, 5 months, 6 months. Because the next 3 or 4 weeks, we might get chopped around so much that theta is just going to destroy those options premiums. So it's not necessarily that we all found orb, so we're using orb as a short-term strategy. It's just that the market is setting itself up that you can get into trades and get quick, immediate profits, and then remove the risk of it reversing on you and taking all those profits away from you. So right. It's just the market conditions right now. It's just not, in my opinion, and the opinion of others. And if you guys are trying to swing, you'll see for yourself. it's not a swing type of market at the moment. You've got to have those quick, nimble trades.
Yeah, and speaking of market conditions, as we're kind of moving toward a Q&A in a minute, I want to get you guys' take just on like, what you're going to be watching Monday. I mean, nobody has a crystal ball, but the market conditions after 1:30, yesterday it's kind of different. There's some forces going on, but I do want to let you guys know out there real quick. This idea of trade psychology, I would like to focus one of our upcoming What Went Wrongs on basically several things surrounding trade psychology, because I'm convinced our main challenges are ourselves. TA, like Mike has said many times, and I think I've seen you say this too, Lala, in Discord. TA and rules are relatively easy to, if you practice and put time into it, it's relatively easy. What's difficult, like we're talking about today, getting rid of FOMO, don't average down, things that are involving our psychology. So I think there's going to be a focus on that coming up, as well as, Mike, someone DM'd me while we were talking, and they said it would be an amazing What Went Wrong episode if we focused on 3 problems that you do have. You mentioned FOMO is not an issue you deal with, but this member says it would be really great to have you kind of talk about issues that here,
3? Who said I have 3 problems?
Oh, I'll send you one.
No, my biggest problem as a trader is selling things too early.
Oh,
and I don't mean like you sell something at $2.80 and the maximum was $3.10. That's a good trade in my book. I mean, finding a resistance here, selling at $3.80, and then an hour later, those contracts are $8. That's my biggest issue as a trader. It always has been. We can definitely do something on it. I can show you some trades where I closed it based on a shorter term resistance where the stronger resistance was, $6 or $7 higher. I just have to find a week where I have a trade like that, and we can definitely do something on that. But that's my biggest issue as a trader, is I'm so locked into more shorter term mentality now. And Lala said it best before, look at the bigger picture. And even like when I talk, I say it myself, step back, right? Step out of the picture. If you're so locked into a 1-minute chart, you might not realize that 2 days later, there was extreme resistance at a certain point because you're not seeing that. You're so locked into the shorter term. So we can probably do a 6-day straight episode on me selling stuff too early.
Yeah, I think that's going to be coming up in the near future as well. So that's coming up. I definitely thought that was an interesting DM. So it's interesting because I know you've been with Black Box, and full time for 5 going on 6 years. That's right? With Black Box for 6 years almost.
At this point, it's got to be 6.
Yeah, so
I've been a full-time trader for 5 years, but I feel like I've been saying that for at least 2 years. So it's got to be more than 5 at this point.
Yeah, so you've been doing this, it's amazing to me that you look at flow like all day long. That's amazing. The way Hell's Bells just reads, you guys do this all day long. I'm part-time, I'm not like you guys, and I'm sure I could, but it's an amazing things you guys do. And as far as your gig, Lala, you are Discord. Tell me the truth. Do you hate Discord at this point? Are you sick of it?
Oh no, I love it. I love talking about
you are all
stocks.
over it.
Yeah.
You're so helpful.
Yeah, I love it.
So you really don't. You got all hours of the night, people. She's on there giving advice, like making people calm down when they're angry, and I just imagine the amount of time you guys put into this is a huge thing. So we're going to go down the road of issues 7-Star Mike has. We're also going to talk about some trade psychology focused things. And basically, what questions do you guys have for these people? Think about it. Put a question in the question box. We will get to it. But I just want to ask you guys real quick. Rumors of war and geopolitical upset, all this stuff that's going on. Of course, only talking, market stuff, not to get into any of the other aspects of it. But what are you guys watching on open Monday? Both of you. Who's first? What are you watching when the market opens or when the pre-market opens?
So I'll go first just because my answer is going to be extremely short. I don't pay attention to news and headlines. I just don't. So when the market opens Monday, I don't have, oh, well, we got a headline that, war is imminent, so we're going to do this or we're going to do that. I don't care. I mean, as a human being, I care, of course, but strictly related to what the market's going to do, I just don't care. So a lot of times I don't even pay attention to a lot of the news that's going to affect the market because I just don't want to bias. So when the bell rings, I'm literally going to watch the same charts I watch every single day. I'm going to watch UVXY, and whatever charts develop in the next 15 minutes is what's going to give me a potential first trade of the day. And then as they develop throughout the day, whatever happens up or down, I'm going to pay attention to the charts, not whatever headline comes out, or whether it's the whatever's going on overseas, whether it's whatever's going on with rate hikes. I'm just going to watch the charts and see what actual in the moment entries kind of present themselves. I'm a very simple trader when it comes like that.
Yeah, here's a great question. Someone asked, why watch UVXY? And I would add too, why UVXY over just watching the VIX? So just generally, why UVXY?
Well, it's monitoring volatility. So I'm going to watch to see what the markets think. Are we entering higher volatility? Are we just kind of, yeah, there's headlines out there, but we're just chill about it? So UVXY is basically going to be the volatility indicator that tells me, the floor is going to drop out from under us. People are going nuts. They're scared. They're terrified. They're whatever. Or, it's just leveling off. It's not really doing anything. So it just is what it is, and focus on the charts more, because you're not going to get these monster drastic moves, which obviously that can change, second to second. But, to me, it's part of what I'm looking at. When I say I'm not looking at just one chart, I'm looking at the market conditions. UVXY is just going to be the volatility indicator that I watch to see if things are going nuts. And as an options trader, it's going to affect your contract prices also. So you might normally trade a $3 contract that today it's $3.90, and you're going, whoa. Well, that 90 cents premium is built in because it's a highly volatile period. So I just watch that for general market conditions.
So why not just watch the VIX? Like, what is why preference the UVXY instead of just VIX?
I wish I had a really good technical answer for you, but the bottom line is, when I first started trading and people were talking about UVXY, I pulled up UVXY and said, okay, I see what they're talking about. Yeah. No one was ever talking about VIX, so I just never pulled it up. It's literally that simple.
No, that makes sense. That makes sense. What about you, Lala? Do you do the volatility products? Do you track VIX or UVXY in your theses?
I use ES and NQ.
Oh, okay.
Yeah, so that kind of helps me keep an eye on things. Usually if NQ is given a push, the stocks that I watch will also get a push. If NQ is pulling back, most of the stocks that I watch will pull back at the same time. So it's a same thing. And I don't have a real technical reason either. It's just what I was taught, and it works very well for the stocks that I trade. Going into Monday, same thing. Could have almost said exactly what Mike said. Wow. I don't have a bias. I learned that is when I started being a lot more successful, is when I stopped thinking what the market was going to do and just let her tell me what she wants to do. I'll be prepared to go either way, and I'll just watch my normal tickers that I watch every day of the week and hopefully make a lot of money.
That's a common theme with the full-time traders I know. And at this point, it's a lot of you guys. I mean, I'm very fortunate to be able to interview and talk to and work with so many people who are full-time traders. But that's what both of you guys said. I mean, there are people I know who are planning all kinds of plays right at open based on a lot of this news and all this downward pressure that we saw Friday. And but those, I don't know any full-time people who have told me that, right? People who are making their living from trading.
Well, keep in mind, it's also just it's a certain trade style.
That's
right?
True.
So Jenny B is amazing at momentum trades. Yeah. And some of, you get a headline out there, that's what's causing momentum. She can jump into something like that and make monster gains on it because of the headline. But she has this incredible ability she just has a feel for the market, for what's going to move and what isn't necessarily. So part of what she does, part of the trading that she does, is momentum, right? So she's going to get a headline on something, and she just has this ability to know well, I feel like that headline is going to cause this ticker to move in this manner. So she'll find a 30 cent or a 50 cent contract. And, 30 minutes later, it's $1.70. Like, she's amazing at that. So she can use those headlines and stuff and correlate that to what she sees in the chart. She's not taking, and I don't want to speak for her because I'm not her, but I don't think she's taking a headline and saying, okay, that should make this ticker do this, right? So she's taking the headline, which is causing momentum in something, and using the chart to say the momentum looks like the chart could potentially do this, so I'm going to enter a trade. So it's a way for some traders to trade momentum by paying attention to those headlines. I don't personally do that. Lala just said she doesn't. I know Pete doesn't do that. So there's a lot of traders out there that are just going to find the information they need in the chart. But there's someone like Jenny who can hear a headline, pull up the chart and say, okay, I don't see resistance until here. I'm going to take the trade based on, that headline might make this ticker go down. It's currently showing me that it is going down. So it's another way to trade. Everyone has to find what works for them. So if I'm ever talking to someone about trading and I say, oh, I don't do this, I don't do that, it doesn't mean it's wrong. It just means it's not right for me and the way I trade and my style. So I don't like when people say, don't do this, right? We're saying don't average down. Why are we doing that? Because generally, if you do that over the long run, it's not going to work just statistically and mathematically. In the long run, it's not a great strategy. I'm sure there's someone out there that averages down a lot of their trades and gets out of trades they don't want with better profits, right? So you always have to listen to people and say, okay, that's their trade personality, that's their trade experience, that's how they trade. I'm going to take what they say and make part of it mine, but maybe not all of it.
Yes, you told me early on that same thing. I remember I did average down and got out of a few things. Then I averaged down and just like Lala's friend, it was a bad mistake. And I remember you said that in the chat room a long time ago. You said averaging down can work sometimes, but it's not a thing that consistently profitable full-time traders do. So that stuck with me.
I have to catch myself sometimes, because when someone asks a question, I say, oh no, don't do that. But then I have to catch myself and say, wait a minute, their risk tolerance might be different than mine. Their trade strategy might be different.
Yeah.
I don't want to average down a losing position. For them, they might say, well, you know what? I didn't really intend to expose this much capital, but it's sitting at a support, it's basing, and now it's moving upwards. At this point in time, I'm comfortable exposing a little more to the position, right? I can't go through all that in their head. So for me, it's a blanket, no, don't average down.
Yeah, right.
But for them, they might say, well, there's other things that he doesn't know about my trade style, my risk tolerance, et cetera, et cetera. Conditions changed, right? I had a $10,000 account when I started. Now it's $50,000. So I'm comfortable exposing another, $2,000 to the position, where when it was 10,000, I wasn't. Now it's 50. I have that extra cushion, right? I don't know these things about other traders. So I'm going to say that blanket statement, but sometimes I've got to catch myself and say, wait a minute, I don't know their entire position. So we're saying don't average down, but we don't know all the circumstances surrounding why they might want to. So sometimes it's not, I wouldn't say it's necessarily dangerous to give advice, but there's always that caveat of, you got to pay attention to, I'm saying don't do this because in my experience, in my journey, that does not work. But everyone's on their own journey. Everyone, even if they're on the same journey, they might be at different points of the journey. So I just want to make sure that people know, when you're listening to a seminar like this or something, always keep in mind that we're talking to you based on either best practices or our personal opinions based on our experiences, and our experiences are going to be different than yours. So not everything that we say is just cut in stone. It's boom, this is it. There's things where you can do to improve your trading that are general best practices. But don't ever take something, even myself, don't ever take something that we say as like, okay, that's a rule. That's the only way to do this. Take what you like from different traders and formulate it all into your own personal trade style.
Yeah, that's right. I totally agree with that. A lot of it, I mean, I'm big into trade psychology. I'm just really big into the idea that everything that makes up who we are is going to, like you've said, make us the trader we are to some degree. And I just can't do certain things that other people can do successfully. And everybody, yeah, that's great advice for everyone. You have to find what works for you. I know in our uh, podcast episode, we discussed a lot about your early days and how it took you a while to find your things. But like, final thing here, Lala, I'm still blown away by how quickly you've become a full-time trader, a moderator, and it's amazing. Like, how long did it take you? I know you said 5 months, but like, when did you feel really comfortable with everything from charting, anything you use for your daily trading? When did you feel that sense of comfort that you have this? I know Mike's told me it took him a while, and I've talked to Kang, I've talked to a bunch of people at this point, but I'm sure that just excuse me, you, Lala, like how long until you just felt, because a lot of new people feel like they just don't have it and they'll never have it and they don't know what they're doing. How long did it take you to feel confident as a trader?
There was a couple different levels of confidence. Or right around maybe the 6-month mark, I felt very confident as a part-time trader. I felt confident that I could make enough money to supplement my income and help pay for extra things that we needed, and just, make extra money. And then probably right around the year mark, just under a year, actually it was right around the year mark because it was right around January. I mean, January was my best month ever. And it literally blew me away how much I made in January. And that's when I came up, started with my new strategy that I've been using. And normally a red month or like a rough month like we had in January, I would not have done well at all because I've always been a bull. And so once I realized that I need to be just liquid and just go with the market, and I found a strategy that worked and it just clicked. Like once you find your strategy, something that works for you, your style, you'll know. You'll know by your bank account. You'll know by the way it feels. It just kind of clicks and falls into place. And so I would say probably a year to where I felt that full, complete confidence. Like I can do this as, full-time job, completely 100%. Make more money than I've ever made in my life and be very happy about it. So yeah, it's very exciting. I mean, I'm blessed every day and I'm excited every day. Like I love it.
Yeah, right on, right on. Well, yeah, that's amazing stuff. All right, so here's the deal, everybody. We still have 60-ish people here. I'm super pumped you guys came out, but we are running up against a time thing here with today. So someone did ask, where can we find the podcast? If you follow me on River, or you just go, you don't have to follow me. If you just go to my Twitter page @GreatRVR, you will definitely see a link that will take you to it. And you can also go to renegadequest.com. That's just a personal website where I put all of my creative projects, just to keep up with them. So the easiest way is go to the link in my Twitter page, or just go to renegadequest.com. And listen, guys, this was great. Lala, I'm glad you came and joined us on our strange little show we have going on, these seminars that we do three Saturdays a month. I really appreciate your time. You got any parting wisdoms? What do you want to leave us with? Where can we find you?
The main thing is if you're a new trader, just take it slow. Figure out what works for you. Make sure you try one strategy several times. I think they say like 20 or 30 times before moving on to another. A lot of times traders are just kind of all over the place, trying this, trying that, every day, trying something different, not giving it enough time. So that was the biggest tips that I think helped me. And yeah, if you want to follow me on Twitter @LalaLovelyTrade, and then of course I'm on Discord. I'm on a little during the day. I like to hang out also with Mike over on the website, but then nights and weekends I'm always around. You're welcome to tag me if you need any kind of help. Check out my room for my strategy. And that's it. Thanks for having me on the show. I really appreciate it. I had a great time with you guys.
Oh, we appreciate it. Yeah, it's always great. That strategy is getting so much positive energy. I know a lot of people are using it, and yeah, check out her room if you're a member of Black Box Stocks. Check out her room on Discord, and if you're not a member, we all three highly recommend it, of course.
Yes.
Mike, what do you got for the people? I think next week we need to maybe we need to do that. We need to go deep into your long history of selling too soon. I like it.
We don't have enough time to cover that. That would be a year-long podcast with no breaks in between, because that's what I'm known for.
I think I can keep you between the lines for that. I think we can.
Speaking of which, before we kind of
Yes.
wrap up here, I don't know if you want to do a general Q&A or whatnot, but
Sure.
so there will be one final kind of parting words, and then I have a question for you. Final parting words are basically, guys, just understand we all have our issues in trading. We were talking about something today. If that's not an issue that affects you, great. There's other things that do. You really have to dig into yourself, learn your personality as a human being, and that's going to lead into maybe some of the things you do consistently as a trader that hold you back. So, like I said, I don't suffer from FOMO at all. That doesn't mean I don't have issues as a trader. I've got, a big issue that I'm fighting every day with, finding shorter term support and resistance and missing out on bigger runs. That's something that I just struggle with. And I've been trading for 6 years now. This is more of a common problem recently than it has been over 6 years. Like, this wasn't a 6-year problem. It's gotten worse since we went from consistently swinging back to day trading and scalping. It took me a little bit longer to kind of adjust, and then I over adjusted. So we all have issues as a trader. And the more you log your trades and find out where you're consistently doing something wrong, the easier it is to kind of correct that. So if it's not FOMO, it's going to be something else. If it's position sizing, if it's not finding the right entries, if it's not waiting for confirmation, whatever it is, log your losing trades and find something that's consistent in those and eliminate that. Log your profitable trades and find what you're consistently doing in those and do more of that. It sounds easy, but it's not. It takes time. You need a lot of trades to go through to find patterns in what you're doing good and what you're doing wrong that you can improve upon. But just know that whether you've been trading for 2 months, 2 years, or 20 years, every single one of us has something that holds us back as a trader that we struggle with that we can improve upon. So don't ever look at someone on social media and say, oh man, they never make losing trades. They're just not showing you. Of course they do. Everyone does. You're not alone. We've all been through those periods where we can't make money and have to figure out what we need to do differently to become consistently profitable. We've all been there. You can do it. It's hard. It's definitely not something you just do overnight. Lala is an exception.
Amen.
So just understand we all go through these things where we've got to figure this out. And if you have the endurance, you will get there. It does take time, but once you get past that hurdle, it's like a whole new world just opens up to you. And on that note, my question to you, River, is actually, you do a really good job of directing these conversations and bringing us to, a set path that we're meandering through and winding on. Before we go to any kind of a Q&A session, I want to give you the floor and make sure we get your thoughts on where your personal journey is with FOMO, or just anything in general, but we're kind of talking about FOMO today. So what are your experiences with it? Where are you on your journey as far as this goes? And you take the floor for a little bit and give us some of your wisdom.
Well, everyone listen up now. I think that FOMO in the beginning, which I've been at it a little bit over 2 years, and in the beginning it was a thing for sure. I would pay too much attention to the price action and not enough attention to what might be in the chart. I just touched the stove enough times, right? My thing is this: when I do something that cost me money, I do it once or twice, and it usually doesn't take too many times to learn the lesson. So I FOMO'd, never huge. I've always been kind of a cautious rabbit with money that I use for trading. My rule is I don't have an amount. Of course, it's nobody's business, but the amount in my trading account, because again, I do this very part-time. it's the whole trading account. If I lost it, it's not going to affect my family's financial situation, right? I'm big into that. So I'm very good at position sizing, which we definitely need to talk about that in the future. That's a huge problem. But in the beginning, I would something would be booming up. Even in the not so beginning, I got sucked into that be big nonsense. You remember that be big sort of little short squeeze that I guess that was maybe 4 or 5 months ago at this point. I don't know. I just I bought some shares and it was stupid and ended up taking a loss. But
It's good to get that out of your system, right? So you can see that that's a possibility of trading. So you learn that early on, and that formulates a little bit of fear is a good thing because it keeps you from doing these dumb things, right? So that's kind of a good thing that you got that early on in your trading, just to experience like, oh, I do have to be careful with what I'm doing here.
I see be big at this point, and it's not that I hate the ticker. It's just I hate how stupid I was. Right? I just I envision myself as a man of intellect that is smarter than waste a bunch of money on be big. But
oh, the market can take anyone, regardless of how smart they are, and show them that there's a little piece of you that might not be.
That's a great thing, because people who are new, no matter how good you are at stuff in your life, it doesn't mean you're going to be good at trading, right? I mean, I typically can be very good at things very quickly, but like it's taken me a while for trading to learn these things. And I'm just people are commenting that it can humble you. That's right. I take money very seriously. Without getting into too much detail, I've been very poor in the past, and and now I know what it's like to not have to worry about bills. If something breaks, you replace it. If the roof on your house goes bad, somebody replaces it, and I pay for that, and it's not a problem. We don't have to think about it. And we're not wealthy, but I'm just saying, compared to where I have been in the past, I'm very wealthy compared to that. So for me, I always think about this. I don't think there's the idea of house money. I don't like that at all.
I hate that concept. We've had that conversation. I hate that term too.
That's right. This could just be because I come from Appalachia, from a very rural place in poverty is where I began as a kid. And it's like, for me, don't think if you're a new trader, don't call it house money. Don't let yourself get up 2,000% and then risk that going away, because it's not house money. It is your money that you can push a button and it's in your bank account. So for me, I treat it like that. So as a result, maybe we can explore in a future episode too, there is a problem where you don't take enough risk, right? So that might be one of my things. Sometimes maybe, I should buy more than 3 contracts, but that's just kind of where I am with FOMO. It's not really a problem right now, but I am just like you. We jokingly called it MOFO, the opposite of that, the idea of just selling too soon, maybe. I definitely do that as well. But it's coming along. And I'll tell you, the point where it really started coming around, truthfully, was when I joined Black Box just as a member, and just couldn't believe it, because I, wasn't making huge progress in trading until I became a member, and it really has helped. But I appreciate you asking. That's definitely like where I am. FOMO is not really a problem, but I do understand it is a problem, and it's a great path. But trading, people have commented, have you thought about going full time? Or, because I do pretty well, but I don't know. I admire you guys. I admire all the full-time traders everywhere, but like you guys at Black Box, it's I think I would have to go through a lot of I would have to really have a lot of things happen before I would feel ready to like leave a job. You know what I mean? And leave all that stuff and try to do it full time. I don't know if that's from, having been very poor and not being super advanced as a trader, I guess, but I am a lot further along. I'll leave it at this. I'm a lot further along in my trading journey than I ever thought I would be, and that feels great. I'm surprised, actually. I think my wife's surprised too. She's like, "Wow, you haven't
She's keeping you in check.
You haven't lost a ton of money, River." Because I ride motorcycles, I skydive. I'm kind of an adrenaline junkie, and I don't think that's good for traders. generally?
No, not at all. That's the person that buys, GME at $1 and thinks it's going to 1,000.
Going to the moon. Yeah, like I want trading to be boring. I do other things in my life to be excitement. I have excitement all over the place. I want trading to be boring in a way, because it's not. And what about you? Do you sometimes find trading boring, or at this point in your journey, or is it still kind of exciting for you? How do you see that?
It's both. The boring trades are the ones that just generally pay right because you're in a solid setup and the trade's just doing what it's supposed to do. But as a scalper, I want something to move immediately. So if I get into a trade at $2.40 and 3 candles later it's $6, I do get excited over that, but not in the sense that that's what drives me. The dollars that you make on a trade, it's kind of like that's just keeping score. Like I either did what I was supposed to do or I didn't see what I should have done. So it's not exciting in the sense that like I made money, I was excited. I feel good when I make money because it's telling me that I was able to spot what was in my mind a good entry, and it was validated that it was a good entry. So it's exciting in that regards, but it's not like I get into a trade for Tesla and I'm like, oh my God, let's do it. Come on. It's just a trade for Tesla.
Yeah.
Right. So
yeah.
Trading is actually not a very super exciting creative endeavor. It's just, It was when I started. But at this point for me, it's just, I have a chart I'm looking at. If it does this, I'm going to do that. So here's a level I'm looking at. If it breaks this level of resistance, I'm going to open a call position. If it breaks back below that level, I'm going to close that call position. That's all it is. It's mechanical.
Yeah.
Here's a level I'm looking at. It breaks above, I enter the position. It breaks below, I close the position. It broke above, I enter the position. It's not breaking below, so now I have to look at where I'm going to manage the position. Okay, if it gets up here, that's potential resistance. It gets up there, what's it doing? It breaks above, keep going. It gets rejected, close it. Right? It's just so mechanical.
Yeah, right.
The chart shows you this, you do that it's not an exciting thing.
Well, that's why you're successful, partially because you're doing it mechanically and you're not getting swayed by emotions or the LFG mindset or anything like that. So that's got to be part of it. Okay, so all right, you guys have questions, let me know. And there's still over 50 people here, not a lot of questions, but here's an important question that came through, and either of you guys, but listen to this question. So this person asks, a lot of part-timers like me trade from a mobile phone. I feel that puts us at a very big disadvantage. So any tips on basically trading from mobile? Because I know, doesn't Charlie mainly trade from a phone? I heard that somewhere along the way. Is that true?
He does trade from a phone. He is more comfortable and quicker navigating the mobile platform than if he was on a desktop.
So maybe he's an exception, but would you recommend people continue trading just from mobile, or would you recommend the multi-screen, desktop experience? Either one of you guys.
This goes back to you've got to do what works for you. For me, if you gave me a cell phone and no desktop and said you have to trade just from your phone, I wouldn't be as successful as I am. I know for a fact I couldn't do the level I'm doing now if I was just given a cell phone and told that's my only tool.
Mm-hmm.
Now, you don't need 5 screens, but I don't use 5. I use 4. Well, 4 plus a cell phone, so I guess it is 5. You don't need that by any means whatsoever. It's just what I'm comfortable with. And I have my information set up in front of me the way I want to see it, right? So it doesn't mean you need that. It just means for me, that's just the way that works the easiest to allow me to be the most successful I can be. There was a day where I had one of my monitors was down. So imagine having 4 screens and now you only have 3 screens and you're saying, oh, I can't trade, right? Yeah. That sounds stupid. But it did throw me off that day because I was like, well, there's a set of information I look at over here that I no longer can look at. So you've got to use what works for you. If you can use a cell phone and just trade from that, there's no need to change. If you're struggling with just a cell phone, then yeah, you would obviously want to incorporate other stuff. I personally, if I was just given a cell phone and that's all I was allowed to use, I don't think I would be anywhere near as consistent as I am now because the way I look at data, it just takes up real estate. So trying to do it all on one screen, I wouldn't feel comfortable. Like I'm not a person that really suffers from anxiety. If you gave me a cell phone and said, this is how you have to trade, I think I would be a very anxious person while I was trading. It doesn't fit my personality to have that one screen. So Lala is probably going to be a better answer for you, because I can't personally trade from a screen if it's just a cell phone.
Yeah, I'll do like certain, and of course, yeah, I'm not slinging huge, big positions. I'm not doing it all day, every day, but I do use the mobile TradeStation app probably 20% of the time. But I agree with you. I like to have, I just have two screens and a phone, but I definitely like to at least have that. So for me, I'm not a huge mobile trader, but it sounds like more maybe than you. And the question says, he says it feels like it puts him at maybe a disadvantage. So maybe it does. And it would be great advice to just try out, different platforms and see what would work. But I don't know, Angie. I'm sorry, Lala. Are you on the phone? Are you a
Yeah,
phone trader?
I'm still here. Yep.
No, I mean,
Well, for me, oh yeah, for me,
you
I
trade.
prefer to trade on my laptop.
Yeah.
However, I can trade on my phone. I don't mind trading on my phone. And I've actually had a couple of my largest wins on my phone because I'm only looking at that one ticker. So it's allowed me to concentrate just on that one and not be distracted. But if I'm gone for the day and cannot be on my laptop, then I will definitely trade from my phone. I don't have a problem with it.
I'll say, yeah, I don't do like mega cap stuff. I won't trade Tesla from my phone. Do you do Tesla from the phone?
I do. I'll trade all of my tickers from the phone.
Oh yeah, that's advanced in my opinion. That's I'll do some Visa, you know what I mean? I'll do some Ford puts. But yeah, that's impressive. All right, we got some comments here, but no particular questions. So, if you guys have any final questions, let us know. Definitely, I appreciate, again, you guys coming. This is a great thing. We plan on, this is a series, Mike and I will be doing this three Saturdays a month, barring something coming up. You never know. Sometimes Mike may have to sit on the beach all day one Saturday.
You can use GoToWebinar from your phone, so you would never know.
You should do that. I mean, just put in some headphones and sit on the beach. And
if we ever have an episode where I don't share the screen at all, you can kind of just assume I'm probably on the beach doing that.
We'll hear some seals in the background. Are the seals?
Yeah, I don't know what's going on, guys. Must be construction. Like, no, Mike, that doesn't sound like construction.
Yeah, I bet you don't miss New York at February 12th.
I do not.
New York's wonderful, but I mean, I've visited 3 times. I'm here talking like I can tell you the best pizza in Brooklyn, which I can't. I've been there 3 times and I like it. But yeah, I was in San Diego for about 6 months, which again is not a long time, but definitely miss it. Oh, I'm not rubbing it in. I'm sorry. But I think, what part of New York do you hail from? Some people are asking.
I am born and raised on Long Island.
Yeah, Long Island. Brooklyn's in the house. All right, so like I said, they guessed it. That's where they thought. They're not surprised to hear you're from Long Island. Does that surprise you?
I kind of want to laugh at that because
does different parts
know a little bit about New York, you can kind of guess within some decent accuracy where people that say they're from New York are from. You can kind of, it's the way you talk. Like I don't have it's actually fun. I don't have what you would think of as a New York accent, but when I get excited or if I'm out drinking and I start getting loud, people are like, "Oh, dude, we can tell you're totally from New York." And I don't normally talk like that, but it comes out sometimes. So you can, by the way we talk, you can kind of you can definitely determine whether someone's from Brooklyn or not. You can just, if you're from New York, you can kind of pinpoint where people are from. So it's a big area. You've got Manhattan, which is one thing. You've got Long Island. You've got obviously that traditional Brooklyn accent that people think about. You've got upstate New York, which we don't consider New York, but then some people don't consider Long Island New York. So It's a very, very cliquey kind of area, I guess.
Yeah, and then from non-New Yorkers, you guys just get constant stereotypes. That's got to get old.
Yeah, but I mean, stereotypes come about why? Because
Yeah,
a lot of it is true.
Yeah, it could be. Yeah, I'm from the South and definitely sound like I crawled out of a swamp somewhere. So people often, definitely all the Southern stereotypes, they definitely apply those with gusto and, all the time. So that's what people do. We all sound like certain things. And I don't know where. I know Lala lives in Daytona, but are you from there? Are you from elsewhere? I'm not sure where she's from. She might have left us.
I was born in Daytona Beach, but I was raised over in Orlando. But I've lived here more than I have in Orlando.
So because you have an Orlando connection, do you love Disney? Are you long like 20,000 shares just because?
No, I love Disney and Universal, but no, strictly options.
All right, I got you. All right, so it looks like people aren't surprised in the comments that Mike is from where he is. You sound like a Long Island guy, they say. You have the attitude. So anyway, we could go on, but we got some time things. So let me just say this. Thanks again for joining us here, Lala, and I really appreciate all you do. And that was just a fantastic way to hear your. So we got to hear more in the future, by the way, of how you got profitable so quick. How long did Kang say it took him, Mike, to get profitable? He told me.
He was trading for a while, but he said like when he really dug down and started trying to figure it out, I think he said it was like 8 or 9 months.
Yeah, right. And I remember you were talking about how angry that made you.
Yeah, it took me like probably a year or a little bit longer.
Yeah, right. So I don't know, Lala. You might have beat Kang to the profitability status. That's amazing. So we got to hear more of that in the future. Is all I'm saying. Maybe on an episode or something.
Yeah, sounds good.
All right. So anyway, everyone, I don't see any more questions coming in. I just want to say thank you very much for coming to What Went Wrong. We will be back Saturday. Tell all your friends. Here is our contact info on Twitter, various ways. Trade Talk Media. You can check out Mike there. I appreciate all you guys for coming, and that's all I've got. I'm excited about this series, and I'm ready to see where it goes, Mike. So you guys got any parting words? Because I'm out. I appreciate you guys, the comments. I definitely, last week I cut it off super quick. I didn't mean to, so I'm not going to do that this time. Thanks for coming. Still over 50 people here on a Saturday. Thank you very much. We're honored that you came here and spent some time with us. I hope it was a helpful seminar. Give us some West Coast wisdom, Mike. Leave us with something.
The last thing I'm going to say is thank you to Lala for coming out and hanging out with us today. And traders, regardless of your journey, whether you've been trading for 3 weeks or 30 years, there's always something you can improve upon. Don't let it get you down. Don't let it get you to the point where you're so frustrated you just say, I'm never going to get this. You will. It's hard. We always talk about you got to have an edge, and everyone's like, well, what does that mean? I don't know what my edge is. I don't even know what an edge is. What would it be? If you put in the time to really just dissect what we're doing, it will come. It's hard. It's not for everyone. So there are some people that maybe they're just not cut out for it. But if you really want it, and if you really ask yourself, how bad do I really want it? And I don't mean just tell yourself, yes, I want it. Like you're willing to go through those sleepless nights of crying yourself to sleep because you feel like you just can't get it. And you turn around and say, I don't care. I'm still not going to stop. If you really want it, it's tough, but you're in a group of people. And even if you're not in Blackbox, on Twitter, you can find us. You're surrounded by a group of people that are willing to help out and share what they've learned. And we turn around and look to others to share what they learned with us. Find the right people to surround yourself with, believe in yourself, and you'll get through the tough times.
And that's experience talking. That people in the intro class, people I speak to a lot, they have the goal of being a full-time trader one day. It seems like a lot of people that I interact with aren't really content with trading part-time. It's not what they want, and they want to go full-time. So that is that's an amazing attitude to have that's going to help people. And I can't wait till next week. So You heard it from the man. My name is River, the Great River. Twitter, blackboxstocks.com. Email me, send me trades or topics. What are you struggling with? It's okay if you're losing money. You need to learn how to learn from that and not lose money from making the same mistakes. Email me, send me messages on Twitter. Doesn't matter. I'm available. I'm on Twitter too much. I think all of us are probably. But let us know. We're going to be doing these. I appreciate you guys coming. Follow Lala on Twitter, Lala Lovely Trade. She's there. It's amazing trading content. You should follow her. And of course, 7-Star Mike is everywhere. And I just want to also plug his website real quick. Trade Talk Media is an amazing, I may be misspeaking, but the way I see it, it's an amazing resource. It's a trading resource with all kinds of educational content that is just free to access. And of course, I write a column there, but none of this matters. I'm just saying it's a great resource for people who are new or intermediate or even advanced to trading. But check out his website, Trade Talk Media, and we're around. And thank you guys for coming. And we'll see you. I'll see you next week, Mike.
We'll be here.
Same place, same time. And have a great weekend, everyone. Thank you for coming out.
Thanks, guys. See you later.
Yes. See you later, Lala. Have a great day, everyone. Thank you for coming.